All right, everybody. We're gonna be starting here in a little bit. So just want to make sure, just a temperature check here. Make sure we get everybody ready here and good to go. We're gonna be starting here in a little bit, folks. All right, welcome everybody. Welcome to the session here. We're about to start here with Chief Market Strategist. Let me turn this off. We're about to start here with Chief Market Strategist at Miller Tabak, Matt Maley. Matt Maley's been doing this in Wall Street for about 40 years. So 4 decades, head of trading at Merrill Lynch. He managed Fidelity and BlackRock, two of the biggest accounts in the world, among others, and very well connected. A lot of you guys already know Matt from CNBC or Bloomberg because that's where he does, they interview him a lot. But more importantly, many of you guys, members here, know Matt from the Stock Picks Inner Circle live trading room. That's right. We trade there every day, Monday to Friday. That's where Matt was. A lot of folks were asking me, where is Matt Maley? I want Matt Maley right now. And hey, folks, he's in the chat room, right? So yeah, basically, we're going to be here with Matt Maley here. We're going to be going over different topics, trade ideas, education, current market events, how to profit during the volatility and the market crash. I want to give a couple shout outs here. CJ Patel in the house. We got Delia Espinoza. How's everything going there? Town, John, Philip, Mary. All right. So Mary is in the house. Okay, Matt. So she's like, hey, Matt's the best. So let's go ahead and bring in the man himself, the man of the hour, Matt Maley, Chief Market Strategist at Miller Tabak. How are we doing, sir?
Good. Good. How you doing, Rodrigo? Another unbelievable day in the marketplace today, but it was one where it was profitable for us, even though it wasn't I don't think it was very profitable for most people, but it worked out really well for us. We had some real nice plays already set up going into today. We added some this morning that more than double the money, or at least double the money, I should say. And I don't know my exact totals yet, but so if they're up it might have been 95% or 105%. I don't know, but either way, we basically doubled the money on several trades, and looking for more volatility and more opportunities. And it's something that most of Wall Street has missed this year. Something that I know pretty good.
Right, 100%. I have to give you credit there. We have to give you credit there. Everybody on CNBC, Bloomberg, everywhere, super bullish to the moon. But you've been on point and on track with everything. I remember when you were talking about the highest levels of margin debt, the Nadella guy from Microsoft selling his stocks like this. And the good thing is that you actually tell your members all this stuff. You're like, hey guys, I think something might be coming up and we might want to go in a more cash position. But so I know that you were shorting the Qs, and the way that I did that trade was that I went and I shorted the FXI, which is the stock that it's the Chinese ETF that you sent out, and everybody made, some people, 8,000% sell alert, that trade that you put in the chat room. So it's interesting how different traders use your information, because it's for options, but you have people there that are trading stocks, right? People that are doing swing trades.
Absolutely. And sometimes some people a little they don't feel comfortable trading the options yet, or sometimes they'll follow what we're doing and then get in slowly, and then instead they'll trade in the leveraged ETFs like the TQQ or the Q or the SQQQ, which is the inverse. I'm sorry, which are the leveraged ETFs on the Nasdaq. So one right now, I mean, we could get a decent sized rally at some point soon. We're getting towards a washout here move in the marketplace, and people are like, well, geez, I don't want to take that chance. Or the options are starting to get really expensive because of all the volatility. So you can go in and say, well, geez, if we get a 5% jump over a couple of days in the Nasdaq, and you're in the TQQQ, you're going to make 15%. So it's a short-term trade. It's definitely a short-term trading tool. Be careful of these leveraged ETFs, because they once the market levels off, they don't level off. They start going down no matter what, because they're leveraged. So they're trading tools, but they can be ones that you can really make some good money over a short period of time. And then when we buy the options in that, you can do even better. So it's whether it be index ETFs, regular stock options, and then like as Rodrigo talked about, we do it in other areas too, whether it be in the currency markets, in the China's market here. He mentioned the FXI, which was an unbelievable trade for us. We made we did 25. But basically, 3,000% on half of their position. We held on to the other half for 8,000%. Some people even held on even longer and made over 10,000%. And those aren't ones we definitely trade every day, but when the opportunities come up, we jump all over it and it works out really well.
Yeah, and I have to say, I'm actually up. I bought the puts on the FXI. I noticed, you were bearish on the SQQQ. It's kind of similar. They kind of trade together.
Right.
So, I mean, I'm up like 95% on my FXI puts. So, thanks a lot, Matt. And Mary in the chat says, been listening to Matt about the bear market and made $1,100 today on SPY puts. So
that's great.
This is great to see that. And honestly, I wish that more traders really would kind of get a grasp on this, Matt, because basically like what you're doing with options, this strategy is like it's kind of like you're trading stocks. Like you're buying a call, right? Or you're buying a put. It's very simple, right? You're not doing any spreads, any diagonals or butterflies. You're doing basic
those
calls and puts, right?
condor spreads. I mean, these people on again, I don't want to bash anybody else, but I mean, they're big firms on TV, TV commercials talking and bragging about, that they did these condor spreads and stuff. It's like, that's fine. If you're a sophisticated options trader and you want to get involved in that stuff, that's great. That's not really what I focus on. I was a stock trader for 25 years, and then I've been a strategist for 15 years, but still trading during all that time. And as a strategist, as a former trader, I really figure out what's really should be going on, not what will be going, what will happen, what is going on, not what should theoretically happen. It was amazing listening to the financial news today and this afternoon. Some of these people who were just saying, "Oh, the world's coming to an end." And I'm just like, "Where the heck were you the last 5 months? I've been telling people this was going to happen for a long time. You were wildly bullish. I mean, not every one of them, but most of them were just sitting there going, "Oh no, everything's okay, everything's okay." And they're so the lows are in for the year, and then of course it just went lower. And to me, it was fairly obvious what was going to happen because the Fed changed their policy, and then things got worse when the Russia attacked Ukraine. Inflation's not going away, and we've been able to take advantage because we have the tools today, and we didn't have those in the past. Where whether it be because of the ETFs, but more importantly, these ETFs are so liquid that people can do weekly. And even in the index ETFs 3 times a week. So they expire all the time. They're much cheaper to do. You don't have to pay through the nose and go out 3 months on an options trade. And because think about it, if you have to go out 3 months, the person who's selling you that option is taking on a lot of risk. Anything can happen over 3 months. So they charge you a lot of what they call time premium. If they've only got a week to go, they don't charge you as much. It's much less risk involved. And therefore, when you do see the big moves, instead of making 20%, 30%, which are really nice, don't get me wrong, you make 20 or 30% in an options trade, that's great. We have some where we're making hundreds of percent, and in some cases thousands of percent. And it's again, I'm not one of those guys in there saying, "Hey, go with us and you're going to become a millionaire by Memorial Day." That's not what we're saying. We are very well, two things. Number one, I don't want to say conservative, but because options trading is not conservative, there's certainly a lot of risk in it. But I'm not just sitting there going, "Hey, let's buy some stocks, the options of some stock nobody's ever heard of, because my next door's neighbor's brother has an inside track that says the company's about to get taken over." We're not doing that. We're making solid plays, informed plays, not just wild rumors. And making some real nice investments. But I think the most important thing is that every trade that I do, you hear about it when I do it, and you hear about it when I get out of it, and you get the specific trade. You don't, "Hey, I kind of like the market here. You ought to look at the SPY calls." Well, no, I say you want to buy specifically which asset. In other words, the SPY. Okay, you want to buy the SPY call. You want to buy with the expiration date and a specific expiration date, specific strike price, and of course, whether it's a put or a call every single time. And there are times not everyone works out. Sometimes we lose money, but you know something? If you're losing money, I'm losing money. All right, it's not I'm not buying something hoping it runs up and then pushing it on other people just so I can sell it. Just the opposite. If I do it, you know it right away when I buy it, when I sell it. Etc. And it's worked out really, really well. And the whole point is that so many people have, and market usually goes up. The market goes up 80% of the time. So I understand why most people think that, geez, I'll just always buy stocks and that's how I'll make money. But there are times like these, and these times don't last just 2 or 3 weeks. They can last many months, if not a year or two. And
Right.
that's what we're trying to take advantage of right now. So so that when people are down 20%, we're going to be up 20%. And not only that, when the bottom comes in and you really get a great opportunity to buy the market, those people who have lost a lot of money on the way down are going to be too afraid to jump in because we've profited on the way down. Not that we've not lost money, we've made money. We're going to be able to jump in and really take advantage of it. So I'm really excited about what's worked. It's funny because the last couple of webinars we've done, I've said, hey, next week's really going to be really, really big. And then people are saying, well, what do you mean it's going to be really big? You say that, everybody says that if they're trying to, push their ideas. And I'm like going, well, they've all worked. And believe me, there are going to be times when there's not going to be much to do. We might be sitting there in early August and everybody's on vacation and there's not much going on and we won't trade much. I don't trade just for trade purposes. I don't make any money if you trade more. No matter how much you trade, how little you trade, doesn't matter. I'm out there giving you my thoughts on the market, and other people in the chat room are giving their thoughts on the markets. Sometimes that spurs me to come up with a new idea. Sometimes it gives me an idea. Say, I'm not going to trade that, but that's a good idea. We're constantly working together to really try to get some of these, make some money. It can be done. It's, I'm not saying it's easy, but so many people just sit back and get lambasted.
When you hit it, it's right. Yeah, when you hit it, it's
like,
right. Do you guys still have puts right now, Matt?
Yeah, we had, well, with the market, big sell off today. Well, I'll tell you something. Big sell off today. I did take some profits. These were the ones we bought. Well, I also bought them on Friday, but this ones we bought today. Let me pull it up here. Keep chart. Here we go.
Yeah, it's just really nice that you actually post entries, exits, specific contracts, because if you're like, let's say, for example, if you're like on a live webinar or something like that, and maybe you have a full-time job or something, like you might miss the, when you say, hey, I'm selling, right? But if you have it in a chat room with a timestamp, you literally get the entry, the exit at the exact time that it's there. And let's say, you could step out or something, right? So having it there in the chat room there in text is amazing, because like I've been using the chat room a lot these past couple of weeks with the volatility, because I know that's your thing. I know that like when volatility comes, you know how to profit from it. Like every single correction, you've called it on time here. So definitely a lot of weight on that.
And as you say, Rodrigo, we have we have 2 chat rooms in one. I mean, and it's just one where it has, call it Matt's important messages. And so you have a separate one that also has an alarm on it. So if I do a trade, it'll ding, I'll let you know. But if you, like I said, if you're off, you're working, you're off doing something, there's this whole laundry list, a thing of chat room that's scrolled by all day long. I mean, you don't have time to go through that. So you go to my page where it says Matt's important messages. Not all of them are trades. Some of them are just like, trying to make an important point about what's going on in the marketplace. Right. But you'll have, I only put in about 6 or 7 posts in there in a day at the most. So you go right to it and say, oh, geez, when I was off, Matt bought this, or Matt sold that, or Matt's bullish on this, or Matt's bearish on that. And then you can come in and say, hey, Matt, you put this up an hour ago. I was taking my kid to his dentist appointment and I came back. Is this still a good idea? Can I still play it? And I'll answer. Right. Again, you're doing it in a voice chat. We people have moved on, and you come back an hour later and you missed the boat. And that's
I mean, everybody, and I have to say, like the community of the Stock Picks Inner Circle chat room is so unique and awesome, and it's international. There's people from all over the world. I want to make an announcement here in the chat room, Matt. I don't think you know this, but we're going to be releasing some push notifications on the chat room very soon. And we're talking about like maybe a week or a week and a half, something like that. So for those that do join, keep that in mind. Like it's not there right now, but we do have that. That's going to be pretty much completed within a week or two. So if you have it open on your desktop, you'll be able to get a push notification when Matt is posting on the Matt's important messages. So a lot of people that have full-time jobs, they use this chat room as it is. All it is have a tab open, like how I have it. That's it, right? So.
Great. Yeah. So that's what we're doing. And have I shared my screen yet? I can't remember. I don't know. Should I? But
no, I don't think so. But yeah, definitely share it.
Okay. Let me I just want to show some of these trades we've done today. Continue, bang. Okay, bang. Oops. I almost hit leave meeting, sorry. There we go. Okay, now, this was, let's get out of the way here. This is the trade. I just want to show it. Can you see it okay now, Rodrigo? Can you see my screen?
Yeah, we're good.
Okay, good. So this is a trade we did this morning. And it was this is the SQQQ. Now we're buying calls. You say, wait a minute, I thought you made a bearish bet. Well, because the SQQQ is the inverse ETF, in other words, it makes money when the market goes down. We wanted to buy the calls. We wanted to buy the calls in a negative bet. And so we bought these things, and this is the, let me just put it here, intraday chart. So we had bought them on Friday, okay? And so we made more than this, but just in the ones we added today, we came in, I just put it here, you can see now, options are pretty expensive right now, so even big moves, it's harder to make money for some people. But we came in and look at this. See, we made about 90% just on the ones we bought this morning. And as I mentioned, we bought others, put it up here. We bought others at the end of the day on Friday. I'm sorry, at the end of the day yesterday. So you can see on those. And again, we sold them right near the close. So we bought them right in here just before the close yesterday, and up 180 points. Those aren't exact numbers. That's probably a little more than we made, but still made well over 150% on those options. So now I held on to some of them because I'm really worried that this market's going to get hit further. But late in the day, we also bought some calls, some bullish plays, because the market just started getting washed out. It just, when you say washed out, we just started to see the kind of capitulation that you want to see at a low. Now, I don't know that we're going to necessarily see a big bounce back tomorrow. We'll have to see. We'll wait and see. These things, they call them around turnaround Tuesdays. But see this big sell-off here. Whoops, that's not the right thing. That was SPX, the equity, the stock with the symbol SPX. This is that's the index here. Hold on. So you can see how that broke down. A lower low. It's not really oversold yet, though, on its relative strength index chart. It's getting oversold, but it's not wildly oversold. But let's get rid of the volume there. Boom, so you can see it a little bit better. But we did see today, this is the composite volume, okay? The composite volume on all the different exchanges, okay? Look at how the volume, we did see a decent jump here, okay? It's up above almost 6 billion shares. That's getting high. Now, no, it's not as high, but see these ones that are every once in a while? Those are all major options expiration. We have one every quarter, right? One in March, one in June, one in September, sure enough. There's the one in March, there's the one in December, there's the one in September, there's the one in June. Okay, so that's, oops, let me get rid of that. And these are the ones back in June, okay? And here, we had two of them because it was a what they call a Russell rebalancing, but that doesn't really matter. But the point is, we do get big volume day every once in a while, and they usually, can signal a turnaround. See how this big volume we had here in middle of March? That came just before the early March, just before the stock market started a nice 2-week rally, about 8%. Okay, so we're getting there. Whether tonight signals it or not, I don't know. We also look at breadth. What the heck is breadth? Is it bad breadth? That people have good breadth, bad breadth? Now we're talking about the advances versus decliners. Again, we've seen some really bad days. This is, it's not good. But you can see this is the S&P. It had 73 stocks up, 430 down. We've seen days where it's been, where there's been 9 stocks up, where you have it 50 to 1, 40 or 50 to 1 to the downside. So that, just shows you that people are just throwing the baby out with the bathwater. And that's another thing we looked at. And I will say one thing though, as the day went by and the market sold off, the breadth really didn't get worse. In fact, if anything, it got slightly better. So that's why I came in. I said, geez, a big jump in volume at the end of the day. And the breadth really held in there. Maybe this is a signal. So we came in and we bought a couple very small but bullish plays on the market. We want to make it in both directions. This market is going to be rough. It's going to stay rough all of this year. Something I've been saying since the beginning of the year, pounding the table till the cows went home. I scream. I have TV in my office. I scream at some of the other people on Wall Street who are, they're perma bulls. They're permanently bullish. They're paid to be bullish, and now they're starting to turn a little bearish. That's another reason why I think the market should see a bounce soon. But my point is, every bear market has had several bounces along the way, and we want to be able to take advantage of those as well. And so, I mean, there was a bounce of 20% during the last real bad bear market way back in during the financial crisis. I don't know what you call what happened in 2020. Was it a bear market? Yes, it went down 35%, but it bounced back so quickly because the Fed came in. That was during the pandemic. But you see what I'm saying is, we'll just show you here right now. Look what happened in. Whoops. Okay. 1999. I showed this before, and some of you who've seen this before probably get tired of looking at it, but it's so true and so accurate. This was the decline in, after the dot-com bubble burst. Look at all these bounces. These are big, big multi-week bounces, okay? Same thing here. Same thing here. This one here doesn't look all that big, but it was 8, I think it was 8%. Let me just, I'll tell you for sure in a second. Bang. Yeah, 8%. Okay, that was 8%. This is more than 8%. This was like almost 20%. Again, another big one. And yet the market kept heading lower. This is the same exact thing happened during the great financial crisis. And we'd had these big rallies and everybody thought, oh gosh, the worst is over. Everything's fine. And of course it wasn't. And it didn't change until something had to do. That's what's so important. But see here so far, we think this is only, looks worse than this. Let me go back a few years. Okay, this is a sell-off. But look at that rally. We had a little bit of a rally here, okay? And then we had a nice rally right in here. And of course, it was a major league head fake. And you had basically the vast majority of Wall Street was saying, oh, the worst is over. I mean, this is 18. Oh, no wonder. I've got the wrong stock again. I'm sorry. Let me just get it up here. Because it was not an 18% rally. I know that. Okay, so we had a little bit of a rally here, about 4 or 5%. People thought that the worst was over because, every other rally every other sell had been sold, and this one went up 11%. You can make good money in the options market or in the ETFs, going on those positive, leveraged ETFs to make money. But I saw what was going on in the world. I still see what's going on in the world. And unlike so many other perma bulls who were like, laughing at people saying, look how stupid these people were for being bearish. And of course, they turned out to be dead runs. No way we'll see another low. Maybe if something gets really worse in the fall, maybe we'll see a lower low than the March lows. Well, we're already there and we're already well below it. I'll just step back one point here. Let's talk about some of the things we made. Okay, I talked about that one where we made we made a little over 100% of our money. We made the same thing last week in the TQQQs, which was the bullish trade on Friday. Remember the big sell-off we had on Thursday where the Dow went down 1,000 points. Well, I said to myself, this market, that was too much for one day. We came in the morning and we bought the TQQQ calls. Let me see if I can I'll show you this thing. Hold on. Oops. And I'll show you what we did. We came in at the end of the day. Just want to make sure it's the right one. There we go. I just want to make it bigger so you can see it. So we came in, fourth, fifth. Okay, I'm sorry. This was on, is this the right one? I'm sorry. I just want to make sure I have this correctly. There we go. Wait a second. Okay, good. So here's the one. And we came in and we bought these calls and the market, and the market, I said May, this is just say, it says May 6th, but obviously it's May 6th. We came in at the end of the day and we bought the calls because we thought the market would rally on the TQQQ, and that is the leveraged ETF on the S&P 500, I'm sorry, on the NASDAQ. We made 71% in just in a very short time. Okay, literally by the next day. And then and we've had many other times, just at the end of the month, a week ago, we had the May 2nd QQQ puts. See how this thing came in? We came in at the end of the day. I'm sorry, we came in the morning of the market. The market was rallying nicely. I said, this rally is going to last. Okay, we bought the puts, the 318 puts at 10:30 in the morning, or just before 10:30 in the morning. At the end of the day, right before the close, we took profits. 229% in one day. Okay, and this was just in just a few hours. These are the types of opportunities that present themselves in the marketplace if you know where to look for them. Okay, now here was another one where on the same day we bought the same thing. We bought a couple. It was funny because it was kind of a head fake. I bought these ones. They were a little bit smaller. I didn't buy as many of them, but it was the May 2nd, $320 put option. Again, you see we bought them at the same time. It was on April 29th. And we went in and bought them just before 10:30, and again sold them for a $215% increase in the market. So these are the types of things that we're constantly trying to make money on. This was, and this was another one. Okay, earlier in that week. Okay, we came in at the end of the day. The market was rallying up. I didn't believe the rally. A lot of things that I look at and notice. We went in and we bought the SQQQ calls because that's a bearish bet. Is inverse ETF. Okay, we bought at the very end of the day, right before the close. We held them through the next day, and then after an hour of trading the following day, 2 days later, we sold them for 200% increase. Now, again, we don't make money on every single trade. I don't pretend to be that way. Anybody who says they get 1,000% is batting 1,000, is lying through their teeth. We definitely lost money, but the whole idea is to make money on a lot more. Make money on a lot more trades than you lose money, and of course make a lot more money than you lose. So if you're losing 25 or 50% on one option, you want to be making in the hundreds of percents in other ones. And sometimes we get out of them very quickly, and we just make it. We just say got out of. We've had a couple of times we got out flat. It's like it's just not working like I thought it would. It went down a little bit, but not enough. Let's get out onto the next thing. So these are the types of things we do. And we mentioned. Rodrigo mentioned the FXI. This is the trade we did in March. Okay, this was a situation where we had the stock was down. I mean, just getting clobbered all year long. We know the China stock market was getting clobbered. They kept bashing all their industries, not just technology, but technology, gaming, the retailers, their online retailers. You name it, their educational companies, every single month there was bashing a new one. And then the US said, hey, we're going to start delisting some of these companies. And the market just got crushed. And I looked at what's called the RSI, the Relative Strength Index. All right, it got below 30. It got below 30. See where it got below 30 there? It rallied for a short time, got below 30 there, rallied nicely for several weeks. Got below 30 there, rallied for a couple of weeks. Here, it got ridiculously oversold. Most oversold it had ever been, ever, okay? And so I said, let's go in and buy the calls. Sure enough, the next day, boom, the market rallies, 2 days, rallied about 20% the next day. Another day, the day after that, it rallied a little bit more, but this 27% rally in the FXI just because of that call. But again, it wasn't just a technical call. I also knew from experience that China, when things get ridiculously sold off, the Chinese government comes in and supports their stock market. They always do it. Not that it happens that often, but this was kind of one that was like shooting fish in a barrel. Oversold. I know the government's going to come in. And sure enough, we bought the FXI, came in and said specifically, we're buying the FXI March 18th calls, $30 calls. And we bought them right towards the end of the day on March 16th. The next day, and I said right at the opening, I said, no, we're not going to sell these right away. And wait a minute, you got over 1,000% rise. Aren't you getting greedy? And I'm like, and I would have sold them right at the opening most of the time because you don't want to get greedy. However, this situation was so outlandish, but I knew that the government was not, sometimes, the market bounces back on its own because it just gets washed out and then it has to come down and then come down again, maybe retest lows. I knew that wasn't going to happen because I knew the Chinese government was supporting their market and it was going to rally for a couple of days. So I did wait about an hour after the opening, and these options were up almost 3,000%, and we sold some right there. Okay, and then I said, don't hold on to the other half, don't sell them. And at the very end of the day, I said, okay, let's not get greedy. We're up almost 8,000%. Let's buy these options. And needless to say, that worked out really well. Some people held on to them the next day and made, somebody said, I think they made as much as 14,000, but definitely was some people who made over 10,000%. So, these are not, again, these types of trades where you're making in the thousands. We had another one last year, because last year Viacom, where we made 2,500. We made 2,500. I made 2,500%, and other people in the chat room held on to them for longer and made as much as 5,000%. But again, these ones don't crop up every day. But as you can see, we have many others that crop up that can make you, several 100%. Or again, and many of which where you're seeing nice doubles and triples, where you're making, I don't mean triple your money. I'm talking about baseball terminology, where you make 20% or 30%, and those are very nice trades as well. So let's face it, you get if you own a regular stock, and believe me, there's nothing wrong with that. You want to have a big chunk of your portfolio in that long-term bucket. But if you have the inclination and the time to be able to trade a little bit more actively, you have a smaller bucket for that for these options trades, you can really maximize your returns, especially in a time like this when there's so much volatility, which I think is going to stay with us for most of this year. Again, we'll probably have, things will calm down from time to time, but there's so much going on in the world. I just don't see that happening, the major calming down of things anytime soon. There we go. Okay, now, so what's going to happen going forward? Well, let's look at a few things. Here's one stock. I'm going to say for the people who aren't necessarily looking at options, we're looking at options at this one. When the market turns around, it's called Akamai. I'm here in the Boston area. It's a company in Cambridge. But look how oversold. Remember we talked about oversold? Look how oversold this stock is. Okay, that's RSI. Again, relative strength index. If it gets below 30, it gets below the green line, it means buy. Green, go ahead, go buy. It gets above the red line, that's 70. Stop. Don't buy anymore. You see how when it got to 70 here, the stock's falling out of bed. When the stock got up to here, it got hit. Got overbought here, fell down. Well, look at this, how oversold the stock now got back in February. Well, guess what? It's more oversold now. They reported their earnings the other day. I thought about, do we want to buy this? I said, no, this stock just does not act well. But look at this one. This is one that the thing is, we may not buy the options because the options aren't very liquid. So we might avoid this one. And we never want to go into something that's that much of a risk, where if the options aren't very liquid and that means you tend to have to pay too much for them. It's just not worth making the bet. But you can buy this stock and you can make 10 or 20% very quickly, because look at the last time. It went from, so 96 to, there's basically 20% in 2 weeks, 20%. This stock's going to see a similar rally sometime in the next few days. I say sometime in the next week or two. It may even start as early as tomorrow. Advanced Micro Devices. This is another one. We've made money on both sides in this one. It's worked out really well. But the stock got down 5% today. And it's back down testing its lows. It's a great company with great prospects, and it's flat on its back. This is one we're going to be looking at, because these options in this stock are very, very active. So right now, I'm a little cautious about buying put options, because first of all, too many people are bearish. I've been bearish all year. Now I'm turning a little bit more constructive, because I sat there and listened at the end of the day today. These people, I was shocked. Couldn't believe it. People who are always bullish, and people who just 2 or 3 weeks ago were saying, oh, no, you got to buy. Now they're saying, oh, no, gosh, this is going to be much worse. It's going to last a lot longer. And I'm like, yeah, they're probably right. But the fact that this person who's always bullish is suddenly turning bearish, that means we'll probably get a short-term bounce soon. And again, like the kind we had in March when the market rallied for 2 weeks. Very nice. Same thing happened in January. In a couple of weeks there. We're going to see several of those along the way, and we want to take advantage on the downside and then on the upside as well, because when the market goes back up, the VIX is going to go back down. And when the VIX goes down, the options become much cheaper. And, again, we get the VIX up here near 35. That's expensive. That's high. But we made some very nice money in the VIX options. I'll tell you right here. Let's do VIX. And for those who are not familiar with the VIX, it's something that measures option volatility, and particularly in the index options. And when the VIX is high, it means people are willing to pay a real lot more for puts than they are for calls. And it's getting high now, okay? Now, what we did but you can also buy options on the VIX. And so a couple of weeks ago, we were in there buying the May 18th $30 puts. I'm sorry, $30 calls. Because again, this is an inverse. I don't want to get too complicated here, but the VIX goes down when the market goes up. So and so since we were worried about the market going down, we were buying calls in the VIX. And here it is here. These are the $35 calls. And let's go back. Okay, and you can see where we bought, we bought these things back in here, first of all, and then we took a profit here, but you can just give you an idea of where the percentage gains were. But I guess my point is we're not just looking at individual stocks. We're looking at all sorts of different, whoops. What happened to that? There we go. Okay, I don't know what happened. I don't know what's happening to my screen here. Okay, hopefully that'll work. There we go. See that? Get it in there. Come on, baby. Yeah, 300%. Then they went back down. Some people bought them back in here. But again, even if you held on to them to last week, which we bought them, which we did actually here on Friday, where we sold a bunch of them up over 250%. Some people bought, the people going out in June. But my point is, there's a lot of different ways, and we are constantly looking for different. I mean, and so many people, made money last year trading meme stocks and these obscure stocks that nobody's ever heard of. We're in here buying things that are incredibly liquid. We're buying, made some real nice money this year trading NVIDIA options, advanced micro devices. We had people that were, let's see here, advanced micro, obviously very, very liquid stock. Advanced micro devices. Hello. There it is. And so what I did, and it was funny, I did not participate in this one, which I'm still kicking myself in the butt over. But you can see here, I'm going to get rid of some of these lines here because it does get a little busy. Hope I didn't just mute myself. Okay. But okay, let me get this out of the way. Sorry. Okay. So, bang. But you can see here how the $100 level, support there, support there, support there. And I said, hey, people in the chat room, if this breaks 100, it's going to get hit hard. Now, I didn't play in that game, but other people did and made some real nice money on the way down. And then when the stock got oversold down here, I said, people ought to look up. I take it back. I didn't say that. Somebody else came in and said, hey, I really think that advanced micro devices looks good. And I said, yes, the stock is coming off an oversold condition. They're about to report earnings. And other people in the site had mentioned, hey, whenever advanced micro reports, the stock always seems to go up. They always seem to beat earnings. So I said, yeah, I confirmed that was absolutely true. And also we looked at at what's called a MACD chart. Okay, sorry, AMD, equity, MACD. Okay, and you see this MACD chart is with the 9-day moving average crossing above the 12-day moving average. That looked very good because the other times that it happened here. See how the stock rallied? It happened here, the stock rallied. It happened down here, stock rallied big. So I said, this is a good place. Sure enough, they reported earnings the next day, and the people who bought the $100 call options made twice their money. We came in, it was funny, I said, hey, I wish I had gotten in that trade. I didn't get in that trade, but I would take profits on it. For anybody who bought them, should take profits right at the opening. And that turned out to be a very good call because the stock actually did come back down shortly after the opening. But anyway, so we made it in both sides. Again, we made it after it broke down below that key support level. And then we bought it here, again, based on some MACD. And a MACD chart, when you say those, it's kind of like the, when you get a bullish cross or a positive cross, it's kind of like a golden cross when the 50-day moving average crosses above the 200-day moving average. In this case, it's a shorter term indicator. It's the 9-day above the 12-day. And of course, a death cross is when the opposite happens, and a negative cross a death cross is when the 50 drops below the 200-day, and a death cross is when the 9-day drops below, and see what happens. Okay, now here it's curling over again, but it hasn't made a negative thing. But look at this, negative cross there, boom, stock got hit. Negative cross there, stock got hit. Here we got a bunch of head fakes. You always got to be careful about head fakes. But here we got a good one. Are we watching to see if this one? I'm starting to wonder if we'll get that big washout move this week. So I'm not going to bet big against advanced micro right here. But that's again the things we're looking at. The whole thing that we're really looking at right now is a situation where I'm not really sure how people didn't understand what was going on, but people, it's just human nature. When they make a lot of money, they want to take credit themselves, and I think that they kind of thought that they were invincible, and they didn't look at that that the Fed was a big reason why the market had such a good year last year, and so the fact that they were pulling away all this liquidity meant it was going to be a tough year this year, and many other reasons, which we'll cover, why I think it's going to be tough.
Really quick here, Matt. I'm getting a lot of emails from our viewers here, and a lot of questions about the chat room. So I'll just knock these questions out really quick here, and then we can get back to the session there. Is that all right?
Sure.
All right, cool. So these are questions that you guys have sent over to my email, and we're just going to answer them live. Okay. So does Matt Maley go over member trade ideas? Yes, that happens every day. Are there sessions, live video sessions? So there's a Tuesday session from 11:30 a.m. As long as, Matt wants to go. Typically it's about 20-30 minutes, and, a roundup, adjust the portfolio, what's going on in the markets, a full market update, and, that sort of stuff. The live trading room is open the whole day, right? So is the chat room live? Yes, it's live. Does everybody that join get a free laptop? Yes, you have to do it before midnight though. Can this help me if I trade just stocks or crypto or commodities? Good question there, Phil. Yes, that's something that Matt Maley helps folks there with. Let's see, is this for new traders? Yes, I would say this is definitely for new traders, because when you're buying a call or you're buying a put, that's the most simple type of options trade you can make. And it's really where you make the big gain. So as long as you're timing it right and you're following the entries and exits from Matt, that's all you have to do. Literally just mirror his trades. But good question there, Phil. Let's see. What's the chat room schedule? So the chat room schedule, Monday to Friday, 9 to 5 p.m. And sometimes Matt will pop in there in other times. But yes, Monday to Friday, 9 to 5. Let's see, is there a money back guarantee? Yes, 7-day money back guarantee, Joanna, good question. And price at renewal is the same as today, so it won't change next year at renewal. But good questions there, folks. Let's go ahead and focus now on the session. I'll drop the links in the chat if you want to join or give it a shot. There's a 7-day money back guarantee, but yeah, let's get back to the session here now.
Great.
Matt.
Yeah, while you were talking there, I just wanted to I pulled up the chart on Bitcoin, because I'm sure a lot of people are interested. And you see how it's it's getting down to that 30,000 level. This is a key support level. You can see how it got down to it in early 2021 and bounced strongly off of it. It got down to it last summer, and it couldn't bounce much above it, but it couldn't break below it either. And finally took off later in the year. But we're getting back down to level. If it breaks below that level, that is not going to be good. Not going to be good at all. And but at the same time, look how oversold. Again, we're looking at it's tougher. Let me just zoom in on this one so you can see it a little bit better. It's not crazy oversold. It's certainly been more oversold at times. But see how it's about to where it was here. Okay, it's the same thing here. And again, that was able to bounce. So, several different times. This is going to be a key thing tomorrow to see what happens, because the Bitcoin has become an important risk on, risk off trade. And people talking about the long-term fundamentals, and believe me, those are important, and that's why I'm bullish on it on a long-term basis. But this year, and even for much of last year, it's traded basically on tentacles. And so it's just people get too caught up in certain things, and I don't understand why. I mean, the biggest thing, what I try to help people do is talk about, hey, even if you love something on a long-term basis, or if you hate something on a long-term basis, doesn't mean it can't see counter-trend moves. I mean, we had this thing with Tesla last year. I'll get back to Bitcoin in a second, but we had Tesla last year, and I was telling people the stock was becoming ridiculously overbought. Again, we looked at this RSI, see how overbought it got. It was up above 90. And I said, this stock's going down. It's going to get hit hard. It's probably going to drop below $1,000. And people thought, several people in the chat room were like, "You're out of your mind." And I was like, how could you possibly say I'm out? I mean, maybe I'm wrong, but how could you say I'm out of my mind when the stock has seen many, many, many declines of way more than 30%? I was calling for something between 20 and 30%. And it's like we've seen 40, 50, 60, 70% declines in not just in over time, but in recent years. Why would you think those aren't going to? It's a very speculative investment. It's going to do very, very well over the long term, but it's going to continue to volatile. And of course, it worked out very, very well. We've had some great calls in both directions in this name. But the point is, the people get too caught up. If it's in Bitcoin, if this breaks below 30,000, it's almost certainly going to drop to 20,000. That may not happen this time around, but it's a good chance it'll happen at some point this year, because I think there's a good chance we'll see lower lows, even if we see a near-term bounce in the broad markets. But look at this. These people get too stubborn on things, and if you believe in a long term, it's fine. But look at MicroStrategy.
Right.
I mean,
and don't forget also, Matt, that like, you and I talked about Amazon last week, and man, I also made money on Amazon puts. Like, I've been shorting a lot of stuff here that you've been, we've been discussing here in these
Right.
sessions. And I mean, that's the thing. That's why it's important for traders to know how to do this, so that you're not caught off guard and your portfolio doesn't take such a hit, right?
Exactly. Now look at this thing. Now here's one that at some point in the near future, we're going to be looking to buy calls in this thing, because look how oversold it's getting. Okay, it's getting down to where it was in January. So again, there are names out there that are really getting hit. But when people get too stubborn about long-term calls on something, and that's great. And if you want to hold on to MicroStrategy forever, that's great, and you have it in your bucket. That's the long-term bucket. But I mean, there's the stock. The stock is down 25% today. Okay, this guy, he's been running a technology company for 10 years, and now his stock's down almost 75%, because he's spending all his time investing in Bitcoin rather than doing doing what his company does. Now, of course, other people would say, well, the shareholders really didn't lose out, because the stock's only is basically back down to where it was before he started getting involved in all that Bitcoin. But it's like, what are you going to be? I mean, have a different company and run that for cryptocurrencies. You got a technology company, stay with it. But my real point is, don't get stubborn with when you're looking at your short-term trades. Don't get stubborn with what is not only sometimes obvious what's going to happen longer term. Doesn't matter. Things can turn around. Amazon, in the last 10 years, 24 corrections of anywhere from 20 to 60%. Now its stock hasn't done anything for a year, but going up into 2 years ago, they changed the world. They changed the world in the last 25 years. And yet the stock sometimes gets way too ahead of itself and has to come down. So even if your long-term view is really, really good, really, really bullish, you can take advantage of things to the downside. That's what we're constantly doing, because stocks get too high, people get too bullish on them, they push them to ridiculous levels, and they come down. The same thing happens on the other way. People get too bearish on some situation. That's why I made the call to turn bullish on energy stocks back in October 2020. Pounding the table. Nobody else on Wall Street was bullish on the group. Pounding the table. And a year later, the energy stocks, forget about individual ones that did best. I'm just talking about as a group. They're up over 120%. And Morgan Stanley, Goldman Sachs were patting themselves on the back, because they turned bullish 4 months after I did. They were up 50%. 50% is good. 120% is better, right? That's what we don't want to follow what Wall Street does every time. Okay, they're trying to catch the middle. Middle 70%, and that's what technicians do. Right? Most technicians, we want to get, but the biggest moves are the ones where you get that extra 15% each side turns into multiple. It turns into much more money, because your multiplier is much bigger. I mean, you think about it. If you buy a stock at 20, and that's great, and it goes to 30, that's great. But let's say you buy a stock at 20, it goes to 40, you've doubled your money. That's great. But if you bought it at 10, or if you bought it at 15, you've made way more than double your money. Okay, you've tripled your money if you bought it at quadrupled your money if you bought it at 10. So and almost tripled it if you bought it at 15. You want to get those early plays. It's not always easy to catch the falling knife, and that's what we're fighting right now. But you want to, it's I say easier than you might think. But if you look at the markets right now, you don't follow the herd. You don't follow Wall Street. That's what I said about the energy stocks. The energy people, the energy stocks. Who would buy energy stocks? Fossil fuels is dead. Are dead. Nobody, none of the institutions hold it. And they said that's the exact reason why I like it. Number one, fossil fuels aren't dead as much as we'd like them to be. They're going to be with us for at least another decade, almost certainly 2 decades. Okay, so these guys still going to be able to make money, but nobody's spending any money on being able to extract those fossil fuels out of the ground. So there's going to be a lack of supply even before the Russian war. And then, of course, they were ridiculously underowned, overhated, overshorted. It was an easy call. But the big mainstream Wall Street, they don't want to make those risky calls. Okay, they just want to sit there and say, we'll wait till we're sure that the worm is turned. And that, in this case, they missed more than half the move, or more than half the move before they finally jumped on board. Now they're then taking credit for being so smart and getting it out, getting out of the group, and that's fine. They've done a good job. That's their job.
Really quick here,
firm, that's fine, but that's not what we do here.
Really quick here, Matt, just want to give a shout out here to Barry for joining the Stock Picks Inner Circle chat room. Welcome to the family, my friend. Let's go.
Thanks, Barry. It was great to welcome aboard. Looking forward to talking tomorrow in the chat room. And it's just a this is an incredibly exciting time. I mean, look, listen, we spent a lot of time in the chat room talking about the NASDAQ because that has the biggest moves. It's the most volatility. We're not afraid to look at the S&P, and of course not individual stocks, which we're talking about all the time. But let's just just look at this, the QQQ. Okay, I mean, look how much this has come down. Okay, look at all the volatility there. Look at that big rally there. We made money there. Look at this big sell-off. But it's really not even all that oversold yet. But the thing we're talking about though is that there is so much volatility going around. That's where you make money in the options. These people are sitting around and you say, well, don't worry, just buy and hold. Buy and hold is not going to work this year. It's not going to work at all this year. Okay, people are losing money hand over fist. They're going to lose more money, I'm afraid. Because the issue of inflation is not going away. Let me just step back and take 2 seconds to just talk about the picture that I'm talking about. I'm not a perma bear by any stretch of the imagination. But what I saw was a situation last year where the Fed came in. They had been providing massive levels of liquidity, historic levels of liquidity, and it pushed the stock market well above anything that could be justified by the underlying fundamentals. Of course, the mainstream guys on Wall Street were saying, trying to justify it this way or another way. And they were, and I just kept saying, this is ridiculous. Go ahead, enjoy the ride. But once they start pulling back on this liquidity, it's all going to come down. And a lot of them said, no, it wouldn't for all these different reasons. Now they're admitting, and they're not admitting they were wrong. They're just, they're trying to claim that that's what they said all along, but it's not what they said all along. They've been bullish all along. And so it was inevitable. The stock market was trading at 22 times earnings, 3 times sales. You can't cheat on sales. You can fudge earnings. You can play around with write-offs and stuff. Your revenues are your revenues, period. Your sales are your sales. Unless you're completely lying, you can't fudge them. This is the most expensive stock market ever based on sales and also on market cap to GDP, which is Warren Buffett's favorite indicator. Okay, so the market was ridiculous. Why was it so expensive? Yes, things did improve last year. Earnings did get better. And the economy did get better, no question. But because the Fed kept that emergency level liquidity flowing into the system long after the emergency was over, they just kept the economy could never catch up. The stock market went. So I was saying, and I said all year, we do not need a recession to knock down the stock market. Guess what? The strategist from Goldman Sachs finally said this weekend. It was on the news tape today. Yeah, we don't need a recession for the market to go down more. It's again, it's Goldman Sachs is a great firm, but again, they don't like to be cutting edge. They just they're good enough and big enough where they don't have to be, or they can be late being right. But we're really trying to look for what's going on in the real world, and that's why I made these calls. Now the situation got worse this year with the Fed. I'm sorry, with the Ukraine, the war in Ukraine with Russia invading Ukraine. Big problem. Because now these supply chain problems, which were already dragging out much longer than anybody thought, continue to move out, will be pushed out for many, many more months. Oil prices and food prices, because Ukraine is the breadbasket of Europe and Russia is a huge provider of oil and gas to Europe. These prices are going to remain high. We can announce a ceasefire tomorrow, but those sanctions are staying on for a long time. So we're going to have a lot of liquidity. We're going to have a lot of volatility for the rest of this year, and we've taken advantage of it very, very nicely over the first 4.5 months, and we want to keep doing that because in both directions, because it's what's working right now.
And I mean, we still haven't even talked about like the massive lockdowns in China, where like I think like they're like I don't know, 45 of their biggest cities shut down, their ports are shut down, COVID cases are rising, and I heard that the White House is just preparing for the COVID winter. So I don't know. I mean, there's just a lot happening in the supply chain. So what do you think about all that stuff, Matt? The supply chain, the China lockdowns, all that.
And that has to keep will keep inflation high, because if people, if they can't get the product, they can't get the parts or the products or parts for their products. It means there's going to be less. Again, this is the biggest thing as we talk about. I've talked about this so many times. People are finally talking about it. Mostly supply, and the Fed is admitting we cannot impact supply, but this is a supply-driven inflation. Now, there is some demand-driven. Don't get me wrong. I wouldn't say it's 100% that way. But this is so important. It's different than usual inflation. Inflation is usually good for the stock market. Why? Because inflation, is usually demand driven. And when it's demand driven, people have better jobs, they get paid better, they can afford the price. In fact, they're the ones driving the higher prices because they can afford it. When it's a supply chain or a supply issue where supply is coming down, that doesn't mean people are getting paid any better. And in fact, we hear about people worried about wage inflation. Well, guess what? Real wage growth has gone down 7 out of the last 8 months. People can't afford these price hikes. Yes, they keep hearing how the consumer is strong and how it's going to be, therefore, we're fine. Well, the consumer isn't as strong as people think, number one. Number two, they can't stay as strong because the prices are going up. Yes, they had a lot of pent-up demand after another winter of COVID. So yes, they wanted to get out of the house, get to restaurants, get on vacation. But when that pent-up demand starts to falter, it's going to be a problem. And they're going to pull in their horns a little bit because they have to pay over $100 to fill up their SUV, or they got to pay 3 times or twice as much as they used to when they go out to dinner. They're not going to do that because they have 64% of Americans live paycheck to paycheck. How are they going to be able to? They're not going to go out to dinner as much as they used to. They're going to, because they have to put food on the table and heat their homes and get to work in their cars. I mean, it's just going to happen. I mean, this is what happened in the 1970s. That's what stagflation is. Okay, the 1970s was an oil embargo by OPEC, and that shot oil prices higher, even though the demand wasn't there for it. So people, instead of being good because people were pushing prices higher because of demand, they were shooting higher because of the lack of supply. That's what we have today. There's a lack of supply coming out of Russia with oil and natural gas. There's a lack of supply of food coming out of Russia and Ukraine. Ukraine's the breadbasket of Europe. And then, of course, the supply chain issues are that issue is becoming a bigger problem because of the war in Ukraine, safety issues and ships and things like that. But also what Rodrigo just said about China. And China today, they had some officials saying it was going to be at least through the end of May. I mean, that's another 3 weeks of complete lockdowns in that. I mean, let's talk about the supply chain issues being a problem. This is not a good situation. But again, it's so much different because this inflation is driven by supply, not demand. And the Fed flat out said we cannot really help much on the supply and the supply chain side. What's that? So what are they going to do? They're going to knock down demand so much that it'll make up for the supply chain issues. Well, that's fine. But the problem is that to do that, they're going to have to cripple the economy. I mean, the economy has already been, everybody's lowering their estimates for the economy, whether it be Goldman Sachs has cut their estimates in half. Morgan Stanley has done the same thing. Bank of America have done the same thing. They've cut compared to 6 months ago in October of last year, they've cut them by more than half. And yet they haven't touched earnings expectations. It's just a matter of time before those earnings have to come down. Okay, because the growth is going to be slower. Besides, all that money that people have been spending money on, excuse me, all that money that that was going. No, let me step back 1 second. I just want to talk about with the yeah. So the consumer is going to have just a much tougher time to really have money to buy those products. Now another thing, and it's very misleading when you hear, and I heard it today from a person on CNBC. I have it on the background, that and Bloomberg TV all day long, and the this person came out and asked, and said, the consumer, no, the American savings rate is at an all-time high. That is absolutely wrong. It is absolutely wrong. Actually, the savings rate is back down to its lowest level since 2013. Okay, it's back well down, but below pre-pandemic levels. I mean, what are you talking about? What people are saying, they're trying to equate, because the savings rate did shoot up during the pandemic, okay? But it's been coming down steadily ever since. As a matter of fact, I can pull up the chart while we're talking here. I'll do that. Let's do that while I'm talking. But what happened was that these people, oops, I just had it here. What happened? Oops.
Just to clarify here what's going on, Matt, like you're saying, just to clarify here, Matt, what's going on. You're saying that someone said that savings rate was really high, but that's not accurate, correct?
That is not accurate. What she probably meant to say, but people are making this mistake, is that, okay, here, GP, I'm not sure if I have the right, okay. People are talking about household net worth is at or near all-time highs. And that's true, okay? That is true. The problem is that a lot of that has to do with because stock prices are way up, okay? And home prices are way up. Now that's great. Now the problem is that stock prices have come down quite a bit. So that part of their net worth is no longer as good. But more importantly, the homes, you can't, what are you gonna do? I mean, it's like, if you own some stocks, at least you can sell part of those. If you need, it's like, oh my gosh, we can't make our mortgage payment, I'm gonna have to sell a few stocks. Okay, fine. But what about if it's your house? What are you gonna do? Oh, I'm gonna sell our front walk so we can, make our mortgage payment? No, you can't do that. You either sell the whole house or keep the whole house. It's not a liquid asset. It's a very important asset, and we all live. Well, we all live somewhere. I mean, some of us rent, and some people, a lot of people own. But the point is, this is the real savings rate. U.S. personal savings rate as a percent of disposable income, and that doesn't count houses because houses are not liquid. You can't use them as a bank to pay for anything. Well, that's not true. Again, technically, you can take out a second mortgage, but again, you're just borrowing on that. Okay, but this is the real savings rate, and look at the real savings rate: 6.2%. Right, that's the lowest level since it's very well. I don't say I don't want to say how too low. That's kind of been the level that it has been for quite some time. 2012. Let's just see here. You see, so it's not crazy low compared to the before the pandemic, but it is back down to those levels. So the point is that person, I think what they really meant to say was that people's the net worth, well, it's not their income, but their personal net worth is at all-time highs. But again, it's coming down. Number one, with stock prices coming down, and number two, it's also not right. It's not because of the they can't sell, they can't use their house as a bank to buy stuff. And we got a lot of problems out there. And this, and I'll tell you another reason why the consumer seems so strong. And I won't start boring with all these charts, but wholesale inventories are at their all-time high. Well, they dipped a little bit last year, but they're at like multi-year highs. I mean, multi-decade highs. Why? Because all these companies have come in and bought, small companies, large companies, they're loading up their inventories because they know I don't want to buy this stuff in November. Usually we buy half of our stuff now and half of our stuff in September, and we reload our inventories. Nobody wants to do that now. They want to fill up their inventories, fill up their warehouses now because they know it's going to cost them more in September. So that has been another thing where we've kind of the pent-up demand of the consumer and the people front-running inflation to buy for their businesses. And when we come to next September and those companies don't come in and say, hey, I need any more, they say, oh, don't you want to buy some more? It's like, actually, no, we already bought it back in May, so we're fine. And the economy and all that spending is going to come down. So again, I don't want to overstate it and get over bearish here, but these are the types of things that are going to cause some problems for the market.
Yeah, and the other thing is that as everything happens here, Matt, the volatility, it doesn't matter if it's good news or bad news. As traders in the chat room, you're profiting on both ways. And I think that's a good segue here into my next question. So, we're talking about homes and all that stuff, but like, rates are going up, right? So less refinancing going on and also less people buying homes and prices are going up. So do you think that there is a possibility of a sort of, so people are talking about a real estate crash, and I guess maybe that could lead to a financial issue. What are your thoughts on that?
Well, it could, that is possible. I must admit, I'm not as worried as some people are about the real estate market. And the reason is because I was a young lad in the 1970s, and I was in junior high and high school, and and I remember sitting in those watching sitting with my mother when I was 13 or 14 years old in lines to get gas. I mean, we were literally in gas lines, and so I just don't. And so I know what this kind of supply-induced inflation can get. And one of the things it does is it's actually bullish for hard assets. That's why the energy stocks are doing so well. That's why commodities firms are doing so well. Agriculture companies. And we talk about Archer Daniels Midland, where sometimes the ticker gets confused with Advanced Micro Devices, but Archer Daniels Midland. I mean, here is just look at that. The stocks come down a little bit because people are looking for sources of cash. But look how great this stock has done. This is going to be a great buying opportunity in Archer Daniels Midland. It's a hard asset. Hard assets do well in inflation, and one of the best hard assets is homes, real estate. And so, and the other thing is that we don't have the same type of situation we had back in the bubble of 15 years ago in real estate, because you don't have people buying with 5% down with no documents and stuff like that. You have people putting down, going to live in the houses. They're not just trying to flip it, and the supply is just nowhere. So I'm not as concerned about that, but that doesn't mean that we can't have financial issues. Well, there's a great article last Monday in the Wall Street Journal. It was actually in the op-ed page back, in their in the back of the first section there, and they on the editorial page on opposing editorial. That's what op-ed stands for, right? And there was this gentleman who put in this rare, very interesting article, and he talked about how we know about margin debt. I've talked about the ridiculous levels of margin debt. That's starting to be unwound now. That's what we're seeing, this forced selling. Markets never crash because of fundamentals. They crash because there's too much leverage in the market, and they start to sell. That's what we're seeing right now. That's what we saw that's why you had a crash in the housing market back in 2006, 2005, 2006, because all these people bought houses with way too much leverage, put 5% down, and when the value of the property went down, if they sold it, they couldn't cover the mortgage. So these are the same types of things. We have margin debt where and that was a whole-time high. But this gentleman was talking about how every single time we get a big problem, something shows up in the marketplace that we don't know about. We can measure margin debt. We can measure credit card debt. We can't measure. I mean, who heard about these CFO? I mean, CDSs and CDOs back in the, I mean, we all heard about them. I'm in the business, so I knew about them, but we had no idea that they were leveraged, and certainly the average American didn't know how ridiculous amounts of leverage were in that business. So yeah, a few guys made billions of dollars betting against it because it was because they were institutions, and they could make, first of all, they could see what was going on, and they could make those bets. Back then, individuals couldn't make those bets. The markets weren't there for them. They weren't big enough players to make those bets. Nobody would sell them a options contract that wasn't bigger than $10 million. So people just weren't, individuals couldn't take care of that. But one of these days, a lot of money has been lost in the last couple of months in the stock market, in the bond market, whether it be the treasury market, the high yield market, the corporate bond market, et cetera, the investment grade market. Some point, one of these leveraged investors is going to announce that they're they're liquidating, and the market's just going to go boom, like
That
that.
speaking of that,
Now, but that's what we're doing in the chat room. We're talking about this stuff all the time so that we can see what companies are seeing the big problems. Will this affect the bank stocks? How do we trade around? We've made so much money trading the bank stocks this year in both ways, both buying and selling. And we don't. My point is, we don't want to focus too much. Believe me, I focus a lot on the tech stocks, but there are going to be other areas where we can make money. Just last week, we were talking to people. The guy made 100% on his Bank of America calls. Okay, and he got out. He bought them in here. See when the stock was down here, he bought them. He doubled his money, and we got out right away. And the person in the chat room, and then it sold off ever since.
No need.
Money next he goes.
No need to buy meme stocks or do any of that stuff. Like this is amazing for you guys that like the volatility, because we all want volatility, but when it's a meme stock involved, there's just so much more like drama, you know.
Right, and it's guesswork. I mean, now you're relying on rumors and stuff like that. We're working on, again, we nothing's perfect. We don't pretend to be perfect. Like I said, not every stock makes money. Not every trade makes money. But when you see these things, you can, using the fundamental backdrop, using technical analysis, using sentiment, because when people get too far to one side of the boat, there's nobody left to do that trade. If too many people are negative, there's nobody left to sell, and the stock goes the other way. Too many people are positive, just the opposite happens. And we use that. We use positioning, and too many people are short, too many people are long. And these kind of things give us educated decisions, not wild guesses, because some guy in a chat, some chat room with 30,000 people, and it said that he thinks this meme stock is going to get taken over or something.
Right. And I know that I think it's Tiger Global. I don't know if you've heard of them. They're like the 9th biggest hedge fund, something like that.
Right.
Those guys are down 40%, 44% since the start of the year, and they were all focused on growth. And look, man, this I mean, I haven't been around as long as you have, but like, didn't something like this happen in the dot-com bubble where everybody was so bullish on growth and they never thought stocks would go down, right?
And these companies, firms just went under. One of them, of course, was a long-term capital management that happened even before the top of the dot-com bubble. They were more of a fixed income player, but there's a lot of money that's been lost in the fixed income market right now. But long-term capital management, LTCM, and the stock market got killed. This was 1998, and it was after the Russian default, and they got clobbered in the bond market. The problem was they couldn't. There were no bids. It was such an esoteric market that they had most of their positions. When they got their margin calls, they couldn't meet their margin calls because there were no buyers of this crap they owned. And so they sold what they could sell, and they sold the heck out of General Electric, which at that time was one of the 3 or 4 most important companies in the world. And that was a liquid stock. I mean, it'd be like selling Apple today. And we saw today the way that some of the energy stocks got hit. Why was that? Because the people getting margin calls, it's like, geez, we can't sell enough of the stock that's already down. I can't sell enough of Peloton because it's already down 80% or whatever it is. So I've got to sell what I can sell. And I'm going to go sell my Chevron because that's very liquid. I've got a nice profit in it, and I can still hold on to it. So it's going to be fine. And I'm not going to sell all of it. And so they turn and they sell whatever they can. And that's what happens. So be careful of this stuff. I mean, look at this. This is the high yield market. And we look at this all the time. And we talk about this. And that's the other thing, a real important aspect of the chat room is we're constantly talking about these things so people can learn. I mean, people had no idea that the high yield market, how important the correlation was between the high yield market and the stock market until I pointed it out to them. I just something I've known over the years, and see how this is just getting crushed. And we knew that it has the effect on the stock market. The reason for that is that high yield bonds, unlike regular corporate bonds, you buy a bond in Microsoft or 3M or Johnson and Johnson, they're going to do fine. They're always going to be able to pay their even though their stock goes down, they're still going to be able to meet their pay their dividend, not their dividend yields, but they call them the coupon payments every year, twice a year. It's going to be a problem. They're still going to be able to pay those back. But junk bonds, not necessarily, because that's the highest. They're the highest risk companies, and so that's why you follow them, because there's a concern that they're not going to be able to pay those bonds. They're going to default on their bonds, and so we follow this. So guys have lost a lot of money. We have fixed income guys have lost a lot of money. LQD, this is the best. It's called investment grade. Investment grade. Again, these are the Johnson and Johnsons of the world. Look how hard this market's been hit. I mean, we're talking, conservative investing. We're not buying these obscure high yield bonds. They're buying investment grade, a triple B or better, or is it double B? I'm sorry, but either way, it's good companies, and yet they're getting creamed. And again, these guys are highly leveraged. At some point, they've been scrambling for months now, trying to figure out how to avoid getting margin calls. Well, they're starting to get them, and that's why these markets are all falling out of bed at the same time. And which is going to provide an unbelievable opportunity for us, just like it was after long-term capital management got clobbered. And I'll give you, oops, I did it again. SPX. But we go into the chat room and we're talking. That's why I bought a few bullish calls today, very late in the day, because it had that feeling that we're getting a little bit washed out. 6, 2,000. Now, before the big top came in, oops. Why is this not? Okay, I know my computer's just slow, but well, I'm not sure what happened there, but I just wanted to show you how the stock market was. My system froze up. But the point is, after the long-term capital management deal had been done, the market bounced back very, very strongly, and we're going to see the same thing along here. And again, we're going to take, like I showed you before, we've made money on both sides. Whether it be in advanced micro devices, we bought the puts when it broke above 100, and we bought the calls right in front of its right before the report earnings. And the QQQs and the SPYs on Friday, we made, again, 100% of the SPY calls. We went and bought them at the end of the day. At the beginning of the day. And before the market rolled back over, made 100%, got out of them. Poop, I'm out, So you make that money and move on. And it's this kind of volatility allows you to do that. But the tools we have, again, we have stocks, most stocks, and certainly all major stocks and many medium-sized companies have stocks with options that expire every week. And then, like I said, the index options expire Monday, Wednesday, and Friday every week. So if you want to just make, if you're a short-term, 10 years ago, if you were a short-term bear and you wanted to buy a put, well, your next S&P put, you'd have to go out to June. You'd have to go out, over a month. So you have to go out 6 weeks. All right. That could get very expensive. Again, it's like, all I am is really short-term bearish. Well, okay, fine. Well, what if you're short-term bear now? You can buy, if you were short bearish today, you can buy them for Wednesday's expiration. You don't have to go 2 days, or you want to go until Friday, et cetera. These are the types of things you can do. You can take advantage of them. It's a lot less expensive to do it. And let's look at this. We mentioned the SPY. Equity RSI, bang. Let's go look at these options, okay? This is just the option. I'm just going to tell you, here is they call the open interest. I don't know how many options, okay? Look at this, open interest. 134,000 contracts, right? This is crazy. Look, again, here here's one that expire on Wednesday. 24,000 contracts, 22,000 contracts, 60,000 contracts. Over here in the puts, where's the open interest here? Yeah, again, 13,000 contracts. 13. None of us are going to buy 10,000 contracts. Institutions might do that, but they're plenty liquid. And look at here too, is that the spread between the bid and ask, 7 cents, 5 cents, sometimes they're only 2 or 3 cents, depending on the issue. You can buy and sell them very easily. Again, this is something that we can finally take advantage of in both directions. One of the things that at the beginning of the year, I was kept pounding the table on it, saying, this market's going down and we can make money while the market goes down. Now I'm saying, yep, the market's, I think, going to go down, but we're going to continue to see moves in both directions. Let's ride the bandwagon as long as we can on both directions. When the market bottoms out, then we'll be playing much, much, much more to the long side, the bullish side. When we finally see that kind of washout move, we see the stock market become more better, more fair valued, and we don't get these knuckleheads, permabulls on Wall Street who are telling everybody that the market always goes straight up. And so that's what we're trying to. That's what we're doing, and we do it in the chat room. And like I said, we do it It's not just me. I get a few ideas on any given day, but people are throwing ideas in all the time. They're asking me about their ideas. They're asking each other about their ideas, and it's a great community.
Yeah, I mean, the community is amazing. I remember when we started this chat room, Matt, it was just you and me. And, now we have over about, I think about like 100, 110 people there in the chat room. There's a lot of folks there. It's very active. I have been in the chat room the whole week. I mean, because every time the market starts acting a little funny, the first thing I'm thinking is like, all right, let's just, let's see what Matt is saying. Let's see what Matt Maley is saying. Where is he at? Okay, so we've talked about a lot of things here. Um, stock market, trade ideas, education, and all that sort of stuff. Um, any stocks that you like that you're looking at? Because I know in the chat room you're looking at a lot of things. You're trading in and out, and these are not necessarily day trades. But hey, if you're up 200-300% on a day, there's no problem, right?
Right, exactly.
But yeah, that's the thing. You're timing the market, and that's really you have a knack for that. I've noticed that. Like every correction, you called it on point. Um, and so this is something that your experience. You put it all into the chat room, but
Right, and at the same time, and I'll mention some of those stocks. I just want to say, I'll show you something here. Is that we had on Friday, and I had been bearish for a while. And when the market went up in March, I kept saying, "Don't believe it, don't believe it." Some people in the chat room were starting to get a little nervous and not so sure I knew what the hell I was doing. But and I give them a lot of credit for willing to come out and say, Matt, you were absolutely right. And I knew that rally wasn't going to last, and it worked out really well. But look here, what happened also, though, even though I was bearish on Friday, and the market was getting hit, so it started to, we got clobbered on Thursday. Oh, that's good. This is just the last 3 days, the S&P. So we know it got crushed on Thursday, right? Then it kind of bounced around, and right here, it looked like it was going to fall. It was falling out of bed. It was falling out of bed. But it got into here, and I said, no, this is where it's going to stop. It's not going to go down. I didn't get the exact bottom, but I said, we're going to rally into the end of the day. And what are you, crazy? The market got crushed yesterday. And look at it. It tried to rally. It gave up. It's going off here. And because of my experience and what I knew how the business works and certain areas, and there's certain buyers who come in at certain times, and I felt strongly they would come in right before the close on Friday. And as I said, this is not my first rodeo. This market, and sure enough, the market rallied back. So, and again, it wasn't because it didn't rally back a lot. And it's not like we made a huge bet here and made a lot of money on that rally. But my point was that I was telling people half the thing at the time is just making sure people don't make mistakes. It's like, this would be a mistake to short the market right here. Especially for a lottery ticket that you think you can make a lot of money in the last hour trading. It's not going to go down. And it didn't. Again, I don't pretend to be right every time, but experience helps me quite a bit. But as we were talking about, and Rodrigo asked about, some of the stocks that we're looking at, and the thing is, some of these. Well, let's see. I mentioned Akamai. There's another one. Palantir was a PLTR, is it? Palantir. There we go. Yeah. Now, this one, look at this one, how it got hit. But see how it got crushed today? The problem is that when a stock nowadays gets hit on bad earnings, it doesn't bounce back right away. It frequently does bounce back eventually, but not right away. So this is one I'm very interested in, but not. See how it's getting oversold? Not as oversold as it was in January, but also I'm not ready to jump on it yet because it's got the it's only been 1 day since I reported. Now if the whole market bounces back in a major way, this stock will bounce. But this is going to be one. My point is that if you want to buy Apple, and especially if you like, geez, Apple computer, it's down to almost 20%. Microsoft's down more than 20%. If you want to buy those, that's great, especially if you want to buy just the stock in your long-term account. Personally, I think the stock set will go lower after this next bounce. But the point is, I understand why people are great companies, and you can even look to buy a Microsoft back when it for a trade, because the stock, when the market bounces, this stock sure as heck is going to bounce. Okay, and but you buy a stock that's down 22% or a stock that's down 70%. PayPal is another one. Nvidia is another one. These are good. These are not companies that are going out of business. I mean, PayPal it's got some issues, but they're not going out of business tomorrow. At least not tomorrow anyway. Now, Nvidia, great company. These stocks are going to be, again, you go for the most ones that are most beaten up are going to be the ones that are really going to do well. Look at the Nvidia. What a great company. It's back down, getting oversold again. See, back down to a level that was a big rally there. This was not as big a rally, but a rally for a little bit. And then you can always go further back. I'm sorry, and go a little bit longer and look at the weekly chart. And see now it's getting, how it's getting down near oversold on its weekly chart. Okay, so these are the types of stocks that we're looking for. A little while ago, it was about a couple of weeks ago. Now, of course, all the energy stocks got hit today. I think it was way overreaction, but again, people were using the energy stocks as sources of liquidity. But we see when Devon got down here, got down to it. See how it's 100-day moving average? Let's see. I'm going to put this here again. Again, it's a great company. I'm bullish on oil longer term. And it's got a great management team. And so I was just saying, the stock, look how it got down to its 100-day moving average last year, all summer long, couldn't break through it. Broke slightly below it. Whenever something breaks slightly above or below a supported resistance level, it's not a big deal. It's when they make meaningful breaks. Well, these things broke. It didn't break, just slightly held, came back here in December, held it. It came back down here, okay, in April. It was right there. And people were saying, what should we do? I said, we got to buy this thing. I think it's going to hold its 200-day, it's 100-day moving average again. And sure enough, look at that thing, it's exploded to the upside. So again, it got knocked down too much. It was only 3 days. That may not look like much, but that decline in 3 days, boom, and put it there. Okay, 3-day decline of almost 20% in a great company. I was like, this is you can't lose with this thing. And sure enough, the stock bounced back strongly. And it's a stock I love on a long-term basis. It did get hit today along with the rest of the energy sector, but all it's going to do is provide another opportunity to buy, in my opinion. Chevron's another play in the same type of area. So we're looking at the groups that we like the best, like those ones with that have to do with hard assets, but we also want some of the groups that we don't like so much that are so ridiculously washed out that will provide an unbelievable short-term opportunity. And like I said, funny, I wrote down some names here just the other day as we were playing. Oh yeah, and another one that's going to be very interesting is our old friend Netflix. What are you talking about? Is Netflix ain't going out of business, okay? They've had their tough times, okay? The stock is oversold. Look at the rally here. See, well, when the market turns up, this stock is going to rally. You say, well, that's just a little blurb on the radar screen. That really didn't make you much money. Well, guess what? That rally was actually 30% in 2 weeks. And if you get these stocks, and the stock, you're not going to get the exact bottom, but you get them at a good level, and the stock goes up 20% or 25%, you're going to make several 100% in the call options. I'm telling you, okay? So this is one that we're looking for, that real oversold condition. Let's look at the weekly chart. But again, you don't have to go after these obscure meme names, and you do want to go after the stocks that are down and out. That's like, what do you look at weekly RSI? That's by far the most oversold it's ever been. This thing is getting ripe for a bounce, no matter what its long-term prospects are. Again, if these guys were about to go out of business, I'd be saying something different. They're not about to go out of business, okay? They're just, and we will and are revaluing this company, and maybe the stock has to go a lot lower, but it ain't going out of business, okay? And it ain't going to go down in a straight line, and we're going to take advantage of it to the upside when it does see that bounce. So that's another one. Looking at, and then you can even go stock like U.S. Steel. No, I've talked about this one in the past. Again, hard assets. Steel. You can't get more hard than that. The stock is testing its 200-day moving average. It's getting oversold. You see that? See, the last time it got this oversold, it rallied nicely. Got down here, traded a little sideways for a while, but then rallied nicely. This is going to be one that we're going to be able to play. It doesn't have to be meme stock. It doesn't have to be some penny stock. It doesn't have to be something that's going to change the world in the next couple of years. Believe me, we all want to find those stocks, and we're all constantly looking for them. But those are ones. And the other one is an ETF, the Momentum ETF, MTUM. Okay, simply, it's just a Momentum ETF. And look how this one is been. It's just horrible, right? Higher, nothing worse than higher, lower lows and lower high, lower low, lower high, lower low, lower high, lower low, lower high, blah, 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 blah. Even here, didn't even try to make it, but no, didn't quite get there to make a higher high and then another lower low. But again, it's starting to get oversold. And if we look at its weekly RSI, boom, boom, it's the most oversold it's been in quite some time, okay? And it's testing its 200-week moving average. Let's look at this. Let's go back a little bit further on this one. 2014. Okay, see how it got down? See, and this, are we in the middle? I mean, this was an unbelievable panic, okay? Because the global system, the global economy is shutting down. Okay, so the chances we get as oversold as we did back then are pretty low. Not impossible, but low. And so it did get more oversold, so it could get a little bit more oversold, but it's not fallen much below that 200-week moving average. And so we'll be looking for a bounce in this one. Now the options in this one, I know we've talked about this in the past. I don't think they're as good as you'd like to see. But still, it's one where, yeah, see that the options don't trade very well. So that's not one to play in the options market like NVIDIA is or Netflix is. Well, the other one to talk about and mention is Amazon. Again, as I mentioned earlier, it's been a big problem for this company, but it's getting very, very, very oversold. Again, we talked about this before. And the thing is, though, a month from now, less than a month from now, on June 3rd, they're going to split. And so their options are going to become a lot cheaper. But I think this thing, the worst case scenario, is going to bounce back to this is a weekly chart. This purple line is the 200-week moving average. Let me get rid of these other lines here so you can see it. That's the 200-week moving average. It's going to trade back up to that line, I think, at least. So there's going to be a point in the very near future. But the thing is, I'm not going to jump on this one unless that low comes after June 3rd, because once they split, those options are going to be a lot cheaper. But so these are the capital stocks. Also, some of the bank stocks. And I mentioned earlier how we made some money in Bank America. That's why I advise. It's like, let's go to Bank America. Okay, you want to buy some out of the money puts, some out of the money calls for a bounce. They're not expensive. It's a $30 stock. Okay, look at these things. You can go in there and buy a call. Expires on Friday. I keep getting this thing in my way here. I gotta get that out of the way. Okay, look at this. Okay, $36.50. A $37 call. Okay, it costs you 50 cents. I mean, not less than 50 cents. Like, it's $50 to buy one. Or JP Morgan, which is a great bank as well, but it's a higher price stock, so it's gonna cost you more to buy the options. Now, you can make just as much money in these options, but and the reason why is, like, what's the difference if I buy five Bank America options and only 2 JP Morgan options? What the heck's the difference? Especially if I only buy one, because you see how these stocks, so you buy a couple months, they cost you several dollars, okay? Several dollars, which means several $100s when you buy the option. And the reason why I highlight that is that it's always good if you can to buy multiple options. If you only buy one, which is fine, but you're going to buy it once and you're going to sell it once. That's it. Whereas, if you see something, you buy a call option and the stock really rallies and you own 5, let's say you own 10 options, 10 call options. Well, geez, the things have doubled. Now it's, oh gosh, now it's up 200%. I think it's going a lot higher, but I got to take something off the table. So you sell half, you sell 5. You can do that. It gives you a little bit, or maybe sell a third of it. You sell 3. And of course, if you bought several dozen options, you can play it around that way. But you can kind of scale your way out and of course, once adoption doubles, if you sell half, now you've guaranteed you won't lose money, right? Because you've already covered what you put in, and the rest is just gravy, even if it comes down a little bit. So that's why I mentioned that. But the point is, these are the types of stocks that I'm looking at right now. And again, even in advanced micro devices, which I mentioned, like Palantir, Netflix and NVIDIA, and like I said, too, is that these energy stocks, if they fall further, which they could, even though we like them long term, like I said, I'll tell you. And when crude oil, everybody was talking about, like I said, I was bragging about how smart I was about getting the crude oil call so early. Well, yeah, when it got ridiculously overbought, it got to 130, but its RSI got very, very overbought. This is crude oil. The chart on crude oil got up to 130, and I said, no. We're gonna back off. I didn't say sell all your oil stocks or anything like that. I said, we're gonna back off. And of course, it just came down because it just got too overbought. But now it's stuck in the sideways range again. It's actually in the middle of what you call a symmetrical triangle pattern. And once it breaks out, and I think it will break out to the upside, this group will rally nicely. But again, these are the things we talk about. It's not just giving you ideas of what you can make money on, but also what you can, that didn't, let's see here. I mean, I know I'm going to do it to close it. What you can make money on, but why? And so you can learn. And so you can trade for yourself as well. I'm sorry, let me just pull this up a little bit differently. Here we go. And, but, you know, what I love here is that the stock, well, this could be actually be looked at as a descending triangle pattern. And even though it's a descending pattern, it doesn't mean it's bearish. Descending wedge or falling wedges are not good, but descending patterns are not. See what this is already broken above. It's descending. So if it can break back above 110, it's going to be in great shape. And I think the energy commodity prices will hold well. And the commodity stocks will hold up well. So we got a lot of different areas. And you notice how little I've talked about a lot of the technology stocks. We do and have made some nice money in the semiconductor SMH, but we haven't traded that one in a little while. It just haven't seen the great opportunities yet. But see another lower low. It's not quite oversold. We're going to get a great opportunity to buy this SMH at some point. But again, this is a good leading indicator for the stock market. Back in 2018, it topped out several months before the rest of the market. And the stock market's not going to rally without the semiconductors, the chip stocks. So we'll be watching this one very close to see any signs what will happen there. But again, it's just another vehicle that we can make money on, and we have made money on in the past. So anyway, we've been going on for about almost 2 hours now. But I don't want to bore you guys, but it's just such a great opportunity right now, and it's one where most people are sitting back, and most people on Wall Street are telling you, "Don't worry, we're going to help you weather the storm through this market," and that's fine. But weathering the market means losing less than you might otherwise lose. What we want to do is profit from it, and like I said, we have the tools now, and it's been working out really well in the chat room where people are making money on this thing, and not just avoiding losing money, not just losing less than the other guy. You know, some people are all excited because they're only down 8% instead of down 20%, or other people are down even a lot more. Gosh, we have a lot of stocks that are down more than 50%. So a lot of portfolios have been hurt very, very hard, and ours haven't. We've been able to take advantage of it, and we want to be able to continue to do that as we move through the year, and take advantage of it once the market does turn back to the upside in a sustainable way, and then we're going to pick the right groups and the right stocks for that as well. So this is, we're in for the long haul. I think you can tell I'm very passionate about the markets, and we're just going to continue to play these things in a way that it's also fun. We have a lot of fun in the group, and people have gotten to know each other and chatting, and everybody jokes about how every time I go off to get a sandwich at lunchtime, the market falls out of bed, and it did do that again today. I was trying to call it the Maley indicator. We joke, we talk politics. We try to keep that in the after market hours. Some people get worked up about that. We don't want to, politics. I do talk about politics, but whenever I talk about politics, at least during the market hours, it certainly is just talking about how it affects the markets. What my political beliefs are, you could probably care less. Okay, but if I see something happening, even if it's whether it goes along with what I believe or goes against what I believe, if I see, hey, this is happening. Let's take advantage of it in the market. Even if I love what's happening or I hate what's happening, doesn't matter. It's happening, and we need to move forward based on that. And that's what I try to do with that. That's when I talk about those political issues. And that's when I talk about the geopolitical issues. And something I've studied for a very, very long time. But I also don't pretend to be a expert. So I look at the people that I read and listen to the people that I do respect, and it's helped me to make some real good calls on many different areas. And one of those was when it became obvious that this was in Russia is now a war of attrition. All right, so that's a problem. It's a big problem because now Putin's not going to back down, even if they get a ceasefire. Okay, those sanctions are going to stay on. Now we get a ceasefire. Don't get me wrong. We'll see a nice rally in the market for a little while, but then when people realize, oh, oh, you mean we're not taking the sanctions away? I mean, we're still not going to get Russia's oil? We're not going to get Ukraine's food? We can't get Ukraine's food anyway because we got about 2 weeks left in the planting season. So that's out of the picture. And so therefore, these inflationary issues are going to stay with us for a long time. And that's what I saw at the time, and I really jumped all over that. This war, the big change. They thought it was going to be a big blitzkrieg. They could win, take it over in a week or two. Now it's turned into a war of attrition, and that has changed everything. And that's why some people, even though I was very critical of the Fed for keeping the liquidity spigots open way too long last year, I definitely say, well, wait, let's not go over here. There's no way they could have known that Russia was going to, excuse me, Russia was going to attack Ukraine or invade Ukraine, and they certainly couldn't have known there was going to be a war of attrition that would last a long time. So I don't blame them for that. Besides, as much as they did make a mistake, and I do blame them for certain things because they're making this decline much bigger than they needed to because they caused so much leverage. But the other issue is that they saved everybody's ass in 2020. I mean, the Fed did. We were on the brink. People don't understand. We were on the brink just as much as we were in 2008. Okay, it was just a different reason. It wasn't the bank's fault. It was nobody's fault. It was a pandemic, and the Fed certainly didn't create the pandemic. You can talk about all sorts of conspiracy theories, but they don't include Jerome Powell, causing creating the pandemic. And so he came in when the global economy had slowed down and the market had frozen up. And people don't realize that we were literally there was one major firm that wouldn't make a market in treasury bonds overnight, one night. Okay, treasury bonds. This is the safest in the world. So the market was freezing up. They came in, they saved the day in a major way. They along with other global central banks and the fiscal policies because the system was about to shut down. When the system shuts down, all these banks fail. The system has to be open and running. It can't shut down. And when the market, that's why the Fed cares way more about the credit markets than they do the stock market. Believe me, if the stock market was down 30% and the credit markets are still humming along fine, the Fed is not going to pivot. And that's happened in 2018. Everybody said, oh no, they pivoted when the stock market went down. It's not what they did. It's not at all what they did. In fact, the market was down 13% in December of 2018, and they tightened again. And it wasn't until the market went down another 7%, down to over about 20%. And more importantly, the high yield market started freezing up. That's when they changed, because they couldn't afford for the high yield market to freeze up, especially at that time. I don't expect that to happen. Even though high yield spreads are widening out, oil prices are high and staying buoyed. And oil is a very, very important part of the high yield market. Not as much as it used to be, but still an important part. And therefore, with that many companies still doing well, the thought that this market would get completely crushed, that the high yield market would get completely crushed, is just much less of a chance. You see how here back in the end of 2018, when oil was down here at $40. Now it's up at 102. Even if it gets down to 80, and we're not going to worry about these energy companies that have high yield bonds in the marketplace. They're still going to be able to make their payments. Back here, that's what happened. Everybody was worried. So many energy companies were not going to be able to make. Remember, they took on all that high yield debt so they could do the fracking and all that. And so again, this is another reason to be worried that the Fed is much, when they say their market, I've been saying for a long time, since for 10 years, I've been saying the Fed is much more market dependent than people realize, and much more market dependent than they are data dependent. But at the same time, they do care about the markets, but they care about the fixed income market much more than the stock market. Same thing happened in 2019. Remember that year-end rally in 2019? Everybody kind of forgot about that took place right here. Okay, you know what that was? There was a repo or lockdown on the repo market, and the Fed came in. The system can't work without repurchase agreements, and they came in and they kept saying it wasn't a QE program, and I refer to it as the not QE program, but they were. There's nothing big happened here in the economy to account for this rally right in 2009. Here we are, the end of 2019. It doesn't look like much of a rally, but I'll show you again. Percentage basis. but it was still a nice, see, still 20% rally, right? 20% rally in the stock market in the fourth quarter of that year is because the Fed was flooding the system in to save the repo market. And until we get some sort of issue there that'll force them to pivot, it's all about don't fight the Fed, don't fight the Fed, don't fight the Fed. Some moron started saying don't fear the Fed when the market was down about 8%. Well, they're not looking so smart now.
And just heads up here, we will be posting some educational videos from Matt that we will be recording soon. And basically, like, basic stuff like what's a call, what's a put, things like that. And, that's like that's really Matt really trying to show how much he cares about you guys, right? You're there all day with him, literally. So I can tell you, Matt definitely cares a lot about, the members and also about helping you guys. And, it's just been a great time to be part of this chat room. It's 100%, like, hands down.
Well, thanks, Rodrigo. And I think I agree. I'm passionate about the markets. I enjoy it, and that's what we're trying to do. And it's not like I said. If you're making, I'm not turning anybody's account. If you're not making money, I'm not making money. Okay, so it's the whole idea. If you are, that's the only way. I mean, again, we trade together, and it's becoming a community that's working out real well, and people. Have a little fun with it from time to time, but it's also, we're very serious because we're in there to make money. And there's some people in there that's what they do. That's how they live. That's how they make their living, is by trading.
Yeah.
But it's also a lot of people on there that do have jobs and they're doing the kind of trading that well, again, just enhance their portfolio rather than and still have that kind of long-term bucket that is still a big part of their whether it be retirement or savings, whatever it happens to be.
Right. And what I do like a lot about your chat room, Matt, is that not only do you provide the daily day-to-day options trade that I love, but also you also provide swing trades, right? You help people that maybe ask about crypto or about stocks. I know that people will, for example, say, hey, Matt, I'm looking to buy a stock that I'd like to hold for 5 or 10 years. What's a good long-term investment I could hold? So the conversations that happen in this chat room will vary from options trading all the way to, hey, Matt, what does this piece of news mean? Like,
Right.
why is, so there's a lot of conversation, commentary, market updates, so that you really know what's happening in the markets. And because of Matt, because of his guidance, all the members have been making a lot of money, like with the volatility that we have. Instead of just waiting it on the sidelines, Matt goes towards it, and I like it. I like that style.
Yeah, and like I said, you're talking. Here's one we talked about this a little bit earlier, but one I just talked about in the chat room today, and it's this Akamai, which is a again, the stock you can see has just gotten crushed. And when we talk about swing trading or just buying the stocks rather than looking in the options, again, this stock doesn't have very liquid options. But I want to show you something here on top of the. Let's see here. Let's just go. So what we're going to do in this stock is like pick away at this one a little bit here because it's gotten so oversold, which we showed you. This is what's the MACD chart though, okay? So what we do is we'll come in here and buy the stock in here around 95, okay? But see when it's nowhere near a positive MACD cross. So that's why we're just nibbling very small here. If we see the broad market bouncing back, then we'll get back into it in a more way. But but we'll add to it, and we might be adding to it above 100. And they say, well, geez, why don't you buy it all now? Well, we don't know if it's going to go a lot higher now. What we will know is that if we get a positive MACD cross, remember we talked about this earlier, this is a momentum indicator. Tells you that the momentum is reversed. Look how much it rallied after that positive MACD cross. Look over here, this positive MACD cross, really, really good.
Right.
Okay. Some others have been a little head fake, so we didn't get aggressive there. But what we'll do is we'll just add more for these swing trades. It's like you buy some here, you buy some here at 97, you buy some at 100. So suddenly the stock's at 105. You own the stock with an average price of 98. You can't lose. You put your stop order above your cost, you can't lose. So it's again, we're trying to do things in a risk management way that work out well.
And the other thing, Matt, is that yes, we are talking about large mid cap companies, but we also get into the small caps, right? What about that Mullen Technology one?
That was one that we worked out really well. The stock's trying to get hit again, so maybe work out something we'll look at again. in the near future. But this is, again, hold on a second. So these guys are one of these automotive companies, the electric thing. And of course, today, Rivian, Ford sold a big chunk of Rivian. And oops. Let's see. Yeah, Rivian. I'll just give you a thing here real quick. Sorry. But see how Rivian traded down. It's down 20% today because Ford's sold a big stake in it, and that hurt because it's in the same group. It helped Mulan. So, but look at the stock now. We got it at was it 88, 90 cents in here. Okay, and Rodrigo's the one who really talked about it, and I said we talked about it on a technical basis. I said, look, if it can break above its 50-day moving average, it's also going to give it a key higher high. Okay, above those highs from the end of February, and the stock's going to run. Well, that doesn't look like much of a run, but again, when you go from $2.30 to $4, I mean, it's almost a double, and the options went through the roof. So that's another one too. And then we have this other one, Microvision. Okay, this one I keep kind of looking at here. Stocks at $3 are coming back down again, but we want to see if it can break above that 50-day moving average. If it can do that, it's going to be real positive. So we're looking at big cap, small cap. But we try to be responsible. Again, we're not looking at meme stocks so much. People have asked me a lot of different times about some of the meme stocks, and we made a fortune in Viacom, which had become a meme stock for a while. And we bought the put options when that stock got ridiculously overbought. And but for the most part, those are just guessing games. It's just hard to know when those things are
right. And another stock here that, man, how low can it go? Let's just play a game. Like, how low can it go? Right. We're gonna look at PayPal, and in the chat, just let me know really how low you think this thing can go.
Yeah, and I think it will be a great buy. But I've been saying that for a while, and I've been saying that for a while, but I haven't said it is a buy. In fact, I've said we're not buying it yet. But it's, and again, geez, it's the thing is, it gets these little bounces. So on a technical basis, but let's see how long. Let's look at a couple. Again, the analysis. We look at the fundamental analysis. Look at the stock. 26 is 20 times earnings. It's a lot cheaper than it was, but it's not dirt cheap. So, but it's getting there. And like I said, the stock just cannot get the kind of oversold condition on its RSI or other charts. We could look at the stochastic charts. I don't want to bore you with all these many different charts, but we do look at several of them. I try to keep it relatively. Whoops, hold on one second. Let's look at the weekly. But yeah, but one of these days, this stock is going to go. Yeah, it's still not as oversold as it was back in February, March. So I'm staying away from it for now. This is one we can make money on, but right now it's just not working, and so we're going to stay away from it. And people they want to look at the stocks that the hot ones for today, and there's so much money that can be made in these other names that trade very, very liquidly. Again, whether it be Apple or Microsoft or Amazon or whoever. No, Amazon's going to be that way in the future. Tesla is another one we trade frequently. But those aren't, again, we're trying to get those sexy ones with the big moves. But as I mentioned earlier, you can still, look at the money we've made trading the Bank Americas of the world, the Devon Energies of the world, et cetera. The market is chock full of ideas out there. Now, the one thing that
the other one maybe that you can look at is, we looked at Netflix. That looks pretty bad. The other one that looks pretty bad is Chegs. Like, I don't know if the people just are not going to college anymore, or they're not making it a requirement to have a degree, or what's up. But
it's such a good story, and you want to just buy this stock because they're trying to do, the thing is, it's not necessarily all easy to make money, but it's going to be a great buy at some point. But you can just see how this stock has done nothing since November, and did nothing sideways, and finally reported lousy earnings, gets hit, bounces for a day or two, now it's going back down again. But people are no longer, say they're no longer cooped up. They're going back to school, but now they have more to do. And for a while there was like, hey, I'm just sitting here at home. I might as well study hard. I might as well get that extra stuff. Now they're like, they're off at school, or especially for college students, it's like, okay, I'm not cooped up in my room anymore. I'm going to go out and go to a party, or I'm going to go out and go to the football game, or the girls' lacrosse game, or whatever it happens to be, and just go out with friends, whatever, whatever it is. But the thing is, it's such a good idea, and it's one we want to look at on a long-term basis at some point. Trading 16 times forward earnings, that's, you got to believe in those earnings. I'm not sure if I believe in those. So it's getting cheaper. But it's one that I'm just not ready to step up to the plate yet, because all of this stuff with that did really well in the during the pandemic are being revalued. And it's my favorite cartoon is the thing of Netflix was said, it had a chart and it said, here they claimed up and down that they were a tech company. And then it got, and it went up to here. They said, then they really pounded the table, and now it's back down where it is. And they said, oh, no, we're a media company. And it kind of a joke there, but people are revaluing things, and they're revaluing this company as well. It's going to be people looking for the next big thing cannot die. We can't. There's too many people. Or I say a lot of people have lost money looking for the next big thing. The next big things there aren't that many of them. There weren't as many of them as people thought there were a year ago, but they're still out there, and we're still going to be looking for them. We're looking for and they say, looking for the next Amazon. Well, that was 25 years ago. I mean, there's going to be plenty more that will continue to change the world.
Speaking of Amazon, with their earnings, some people are saying that the boom of e-commerce is pretty much done. What do you think?
No, it's the big. No, I mean, people aren't going back to the stores in any major degree. Yes, they're going back like more than they used to, and people do like to go shopping. I mean, it's a social thing. People like go shopping with their friends, especially women. I'm not being sexist. That's what it is. For most guys, they go in, they buy it, and they leave. That's just it is what it is. But whatever happens to be, people go out and they'll still like to do it, but it's just too convenient. And so many people, I mean, especially young people. I mean, how many people cook? How many people cook their own meals? I can't tell you how many. I have children in their 20s. And some are out on their own now, and the amount, how often I got fast food every once in a while, but I did make my own dinners a lot. Not a horrible cook, but they never do that anymore. And so the food delivery and grocery and delivery of anything. I mean, people were sick. One of my sons had the flu during the holidays. It was not COVID, thankfully, and it was small, but he couldn't leave the house, and so he had some stuff from CVS sent over. Boop. I mean, they just brought it over. I'm not, I mean, it's not going away, but it's being revalued. And we've seen what's happened with Amazon. But don't give up on certain things. So many people, it's like a football team that has had a losing season, but they did have one receiver who caught 100 passes. And then the next year they said, we're going to change everything. We're not going to throw him that many passes. It's like, wait a minute. The guy's really good. Make sure to keep throwing him passes. We'll just do a lot of other things differently. Maybe he won't catch 100 passes. We'll mix it up a little bit, but don't throw the baby out with the bathwater. And I think that the online thing is here to stay, and we need to continue to embrace it. But again, this is another one of those situations where we got to get. What I try to help people with in this thing is avoid the herd. Avoid that herd theory. So many people, and like I said, happened on Friday when everybody said, look at the market, it's going down. It's human nature to take what's happening now and pushing it out. Whether it be, my local football team or my local sports team or my college team, they've been winning forever. So therefore it's going to last forever. And it doesn't. It just doesn't. Okay, and nothing does. But that's human nature. And so they sit there. But then when they give up on something, they say, "I'm never going back to it again." And that's the big problem. So I'm pushed constantly. What happened on Friday with people? They saw the market's going down, going down, going down. This thing's going to go down right into the close, just like it did yesterday. And I was like, "No, it's not." And again, an experience told me to go the other way. The people who do really, really well in trading stocks are the they're the people who go the other way. They go against the consensus. Okay, those who just follow the herd, you can in a year like 2021, you can do real well. But Warren Buffett became. Said you want to be a contrarian is what you want to do. Warren Buffett became a billionaire by buying stocks and companies when nobody else wanted them, and that's how he became a billionaire. And that's how a lot of these hedge funds, they're the ones who see the value in things when they're either really undervalued, or like with what happened with Enron when people realized it was a fraud and they shorted the stock and made millions of dollars. These are the billions of dollars. These are the things that that we want to go. But when everybody's buying it and it gets ridiculously overbought, enthusiasm. I mean, it's all the whole thing about tulips. You think it's any different than tulips? And people are like, how could they be so stupid to buy tulips? Well, how could they be so stupid to buy stocks that didn't have any potential for earnings in 1999? But they did. They just got caught up in because they were making money, and human nature was, I've made money this many weeks in a row in these type of stocks. I'm just going to keep going. And then when it stops, they get kicked in the teeth and they wonder what the heck happened. And so that's what I try. I'm a contrarian, very much a contrarian at heart, and it's served me very, very well over the years. And that's what we try to do in the chat room is kind of steer people in that way for those kind of because that's where you get the big moves. I mean, when everybody was bearish on China, including me, until it got ridiculously oversold, and that's where we made several %. And most people were still hating the market down here. And we said, no, you got to buy it. That's what we're going to be. We're going to be doing more of that in the next few weeks and maybe in the next few days in the U.S. stock market. Let's look at Bitcoin real quick and see where that is, because that could be telling us where things are going to go tomorrow. If it's down below 30,000, we got some problems. And no, it's up. Well, it's not up a lot, but it's up $200. So we'll be looking at that overnight to see how things are going to open tomorrow. But
so if Bitcoin drops below, I mean, that's the thing. Like because here's the thing, Matt. You also trade. You can also trade stocks that move with Bitcoin. Speaking of that, let's look at. Well, I mean, also coin. Like I've heard some wild stories about coin, man.
Yeah, and of course with it's what's his name is picked it as one of his shorts. He's got to be making a fortune now. But yeah, this stock is just getting crushed. And again, the reason why we had this, I had this problem on the last time we talked about him. I couldn't remember his name, but the big famous short seller who
Jim
did
Chanos,
Jim Chanos, yeah, Jim Chanos, exactly. So he came out, I was about a month or so ago, and said he doesn't like the stock, and he said it had nothing to do with his opinion on Bitcoin, Bitcoin or cryptocurrencies in general. He just said it was because the way the company is, it's got too much competition, and it's the barrier for entry to do what they're going to do is not that high. And he's not perfect. He shorted Tesla, lost a lot of money shorting Tesla over the years. I don't know what his position is now, but he still thinks that it's way overvalued. But I got a feeling his short position very much. But look at this stock. This stock is down 60%. Now, I forget exactly when he came in and announced it, and he was probably shorting it all along in here. So his average price isn't way up at 200. Maybe his average price is down here. But in 2 months, stock's down 60%, and he's short. I'm sure he owns some puts too, and I'm sure they have options to trade. And so these smart people. But here it is. The stock is getting oversold, and he's I don't know where he stands now. He may have covered the short already because it fell so far so fast. I doubt it, but he may have. And this, as you can see, the RSI is getting oversold. We want to look at another chart that we talk about, and I haven't talked about yet. Sorry, is a Bollinger Bands chart, and that's something that we basically take there's a lot of things involved, but to simplify it down, they take the 50-day, the 20-day, again, not the 200-day, the 20-day moving average, and see how the stock is trading versus that. And let's see here. Look at this thing. Right now, the 20-day moving average, let me get these lines out a little way so it's not so busy on the chart. But here, see this line in the middle? It's kind of grayish line. That's the 20-day moving average. The purple line is 2 standard deviations above that moving average. And the green line, or the yellowish green line, is 2 standard deviations below the 20-day moving average. You can see how much below it is. It's way below. Okay, it got that low down here, and the stock rallied nicely. Okay, got below it here, only a couple days, but that was still a 30% rally right there, 30% in 3 days. This one's getting interesting because it's really knocked down on its Bollinger Bands, not fully oversold like it was in January, but definitely oversold. So this one's going to be one that people should look at on the buy side. at least on a near-term basis, and it doesn't mean Chanos is wrong. I'm definitely not saying Chanos is wrong, but see how this thing's very liquid in its options. 5,000. I mean, it's not as liquid as the SPYs or anything like that, but you got about May 20th, and there's plenty of liquidity. And the bid ask, it's 20 cents. It's not a narrow spread, but they're not wide spreads. You probably want to put a order in on a with a limit and not have to pay the offered side, and you'll probably get the execution. But and look at this. Look at the volume. Sorry, there's so much more volume on the puts right now. People are getting way too negative on the stock. It's getting oversold by the Bollinger Bands, getting oversold on its RSI. This is one that I do not want to own for long term because I don't want to bet against Jim Chanos, and he's been spot on so far. But it's also getting one that's getting overbought. It won't fall in a straight line, just like it didn't here. So a nice rally there, nice rally there. This stock has acted poorly since November, but it's had a couple of good rallies. So we are going to be looking for this one. And if this market, gosh, I got to make sure I write that down. So that's a 33% rally. Okay. I'm sorry here. I just want to make sure I write down a coin so I don't forget to talk about that one in the chat tomorrow, because that one has some potential. Again, short term, don't like it. And that's, again, when we get some of these things where things become big extremes, it's hard to fight the fundamentals. It's like, this is a great story. I'm not going to buy puts in the stock. This is a horrible story. I'm not going to buy calls in the stock. But on a short-term basis, that's when you want to do it. That's when you can do it. If you want to be a trader, that's fine. If you don't want to be a trader, that's fine. Long-term, that's all you want to concentrate on the fundamentals, that's fine. But if you want to be an active trader at all, that's where some great money can be made. When people, when everybody's saying one thing and it may go a lot, it's really, really bullish. It may go a lot higher over time. It's not going to go that way in a straight line. Nothing ever does. Nothing in the markets move in a straight line. And that's what I'm constantly trying to teach people and show them there's opportunities to make money in these in markets that are absolutely crazy right now. The thing is, if we didn't have the tools to do it, I wouldn't be doing this chat room. But we do have the tools, and it has worked. And I think it really will continue to work for many months, not many weeks, and I'm sorry, many weeks, if not many months. I think really for the rest of the year. And then once that's over, the volatility again will return to a more normal market, but there will still be unbelievable opportunities because the market will be inexpensive, and we'll be able to bet. Then we'll go more into we'll do some day trading. We'll continue to do some day trading, but we'll do even more of the swing trading, because that's where you're really going to make some great money. And there's a certain strategy to that a lot of people don't follow. But again, I talked about earlier about not being afraid to chase stocks that you own. Because you can, when you add to them, when you're adding to a winning position, that's a good thing. When you're adding to a badly losing position, now you're just hope. You're basing your investments on hope. That's not, I've been saying it for a long time. You hear it in the commercials nowadays too. I mean, I certainly wasn't the first person to say it. It's one of the oldest adages on Wall Street. Hope is not an investment strategy, not a good investment strategy. So when you own a stock, you buy a stock and it goes down a lot, sell it. You go down, it goes down more than 10%. Options you can play around. That's a little bit different. Over stock, it goes down 10%. Get out of it. It's not 10% from when you first buy it, especially if you're trying to get something cheap. If you buy something and it's tripled over 5 years and it goes down 10%, don't sell that. I'm not saying that. But if you have a loss, do not take a loss of more than 10%. It just doesn't mean you're wrong about the company or the stock. It just means you're wrong in your timing, and you can find another entry point, which may be just a few days away, but maybe a couple of weeks away, whatever it happens to be. But again, that's what we're going to be doing once we get out of this bear market. But and it is a bear market. I mean, the S&P technically hasn't fallen 20%, but the Dow certainly has. I'm sorry, the NASDAQ certainly has. And like I said, I have a lot of reasons to think it'll fall further. This next bounce, as I keep talking about it, we're going to buy all these oversold stocks, but we're not going to hold them very long, because I think we're going to resume the decline before long, and it'll last just long enough to suck everybody back in just in time to get to hammer them over the head again. That's what bear markets do. And as I showed you earlier, what happened in 2000 to 2003, same thing happened from 2007 to 2009. That's what's going to happen now. Will it last 2 years? It could. Will it last a full year? I think it will. And again, we're going to be the ones that are going to be able to take advantage of it when the bottom does come. And the one thing you want to be looking for when it does come is an event. Make sure you're looking for an event. because that's the only thing that stopped the last three corrections, right? And the longtime listeners know that people in the chat room have heard me say it many times, but it's very, 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 very true. You can't, in 2020, it was the bottom wasn't reached because there was a excess, people's sellers just got tired. No, because the Fed came in with a massive QE program. 2018 didn't change until the Fed pivoted their policy from tightening to easing. In 2011, actually 2011 or 2012, I can't remember which, the European crisis didn't end until the EU bailed out Greece. And in 2009, the bottom didn't come until the authorities ended the mark-to-market policy for banks on their balance sheet. So this is what we're looking for, and we're going to make a lot of money along the way, and then and be set up to really take advantage of things too when things go back to normal.
Yeah, that's really that's amazing there, Matt, that you can actually help traders make money on both ways. So it does not matter if we are in a great environment or a bad environment or whatever environment, you're still going to be able to profit from the volatility. There's always things. If the market wouldn't care about this, it would care about something else. It's always going to care about something, right?
Exactly, and that's why we look at other things. Like, so we look at the currency markets, and we look at the China stock market, and we look at the treasury market, and we play in those all the time. And then again, now that we have the tools, 20 years ago, 10 years ago, you want to go buy the Chinese market, great. Why don't you go call your broker in Hong Kong? Who? What? Ooh, I don't have a broker in Hong Kong. So you can do it now, and so it's really and when you have this situation now, it's just again. The biggest thing I push and I try to teach is we got to get away from human nature. We got to get away from that herding that humans like to do. That's where you make the money, especially in volatile times. Okay, and because most of these people, they're just not going to play. Not going to. It's what's happened now. I mean, all these talking heads. I mean, I just, some of them have been on all the time, but it's just like unbelievable how much they flipped. They just went from being wild. Some of them are still trying to remain bullish, and they're getting killed. But others have, they kind of pretended like they weren't bullish for the last 4 months, and it suddenly turned really bearish. It's like they're just following the herd. The market went down, and so after the horse is out of the barn, now they're changing their tune. What good is that? I mean, I had Alliance Bernstein, one of the big money managers there, and I can say this because the gentleman as a portfolio manager, he's retired now, but he said, Matt, that's why I listen to you, because when the market's really going well, these strategists really don't help me all that much, as you're different than others because you point out things that most people aren't realizing. But when the market's going down, that's when I need somebody to tell me something I don't know, and all these people just keep telling me to be bullish. And until the bottom comes, and then they finally turn bearish, and that what good is that? So we got to think of again, we keep away from the herds, be contrarians, and work that way. And that's when the big moves come. That's when you make the big money, especially in the options market. And it's thought out. They're decisions that we've made. They're not just guesses about maybe the guys are going to come in and squeeze the shorts in this meme stock today. That's just a guess. You have no idea if that's going to happen. And some people, I guess, I'm sure people will collude and do it that way. That's not what we do. But I'll let that for the authorities to try to hash out. At some point, they'll probably do that. Believe me, if this bear market lasts for a while, a lot of these things will finally come home to roost, and some of these people will finally get nailed. But that's not what we're doing. We're making, like I said, based on decisions based on what's going on with the facts that's going on in the market, not just a hope that some stock will be taken over, or some other stock will be squeezed, or some stock will be announce poor earnings. And we do trade around the earnings pretty well, don't get me wrong, but there are times, believe me, there's a bunch of times this week, the past couple of weeks, where we came in and people ask me, what's going to happen to this stock? And I'm like, I have no idea. The stock is completely neutral. It's charted, it's neutral. And I have no idea what their earnings are going to be. It's a great company, probably it's going longer over time. But if you're looking for a short-term trade, but there are other ones where I said, hey, this stock may report real good earnings, but I'll tell you, the stock's really, really overbought, and it's really, really overowned. And the short interest is really high. Whatever. Well, if the stock's overbought, the short interest probably isn't high. But you see what my point is, that I said you look for ripe things. It's like this one's ripe to come down. So if they do report good earnings, it's going to go up a little bit, and that'll be good. If they report bad earnings, it's going to get crushed. Those are the types of things that we talk about. And then, that every once in a while we'll do a little bit different than just puts and calls. We'll do straddles or strangles. But even those are very, very, they're not complicated at all. And so that's, so we do trade around the earnings, but a lot of times it's like, I don't have inside information. There are, I mean, you can do that to advanced micro devices because they have a record of beating earnings every time. And they have other companies that see big gap moves almost every time they report, one direction or the other, and you can buy a straddle on that. But you have other ones, it's like sometimes they go up on earnings, sometimes they go down, and their chart is neutral. I'm staying away from it. I'm not. That's just guesswork. Oh, I heard. My nephew told me. We don't do that. We'd go through, intelligent decisions, and not all of them work because it's not a perfect science, but they work a lot more often than they do, and we're not depending on questionable practices that other people are trying to perform. But like I said, it's worked really well for us, and I think it will continue to do so in the
Right. And Matt, I don't know if you can pull, I mean, I know those are like daily charts. Are you able to pull up like charts where you can see like futures right now, the price action, and kind of give us a little glimpse of what you're looking at there? And because I know that tomorrow, look, man, these past couple of weeks have been amazing in the chat room. I just have to say that, Matt. The volatility is great, man. So like if you are thinking about joining a community or learning to trade, I'm telling you, this is a great community. People are having fun and making money and learning. And it's just great when you're actually a part of it and you can witness it.
Right. Yeah, and it really has worked well. These are the futures. Now you see how this was yesterday, or then they close at 4:15, then they reopen. I think at 6, yeah. And so they stay close. So you see they're bouncing back a little bit. They're up 7. That's the S&P futures. They're up 7. That's not a lot, but at least it's not down a lot either. So that's what we're looking at now, and so that it tells me that we'll have to wait. Here's the Here's the NASDAQ futures, which is really the NASDAQ price graph. I don't want price graph. I want GIP chart. I'm sorry. And same thing. You see, they rallied a little bit now. They've come back down a little bit, but they're still up, not a lot. So we'll just, the big thing is what's going to happen tomorrow is are we going to get, everybody, I remember the 1987 crash clear as a day. I was on my 6th year, just finishing my 5th year at Salomon Brothers on the world's best trading desk in the world at the time, and the biggest and the most powerful. And I saw that happen. And what happened? We had the big sell-off on Monday, and it followed through Tuesday morning, and then the market bounced back in a major way. And actually, the market took off for a couple of weeks and rolled back and retested those lows and then rallied. But the point is, there's this thing called turnaround Tuesday. We may get that tomorrow. We'll just have to see, because if we get another big batch of forced selling margin calls, things could be ugly again tomorrow. There's no guarantee. But I did sense, like I showed you guys a little bit earlier, I did sense a feeling that the market was getting starting to get a little bit washed out. We'll probably need to see one more big whoosh. But if the market opens down big tomorrow morning at the opening, I'll be looking for buying opportunities, and not just in the index ETFs, but also individual stocks. Now, we got some time here, a little time left. Is there? Do we want to go through the? People want to throw in a few tickers, and I can give them to you, and then we'll kind of wrap things up.
Okay, so now, guys, we before we do pop into the Q&A session, which and the live show, which is I'm going to show you the actual live trading room and answer any questions that you have about the chat room. Before we step into that, we're going to do ticker time here. So in the chat, let us know a couple tickers. We're going to pick a few. We're probably not going to be able to get to all of them, but Matt will be following up if there is a trade to be made in these stocks. So for those that are members, keep these stocks close to you. Remind Matt, hey, look at this. Hey, what about this? Because these are all amazing opportunities for us to make money. And as a group, as a community, we all help each other out. So shout out to all the loyal members there. All right, let's pick a couple of tickers here. Let's give them a minute here because there's a little bit of a delay
Sure,
on
sure.
YouTube.
Well, let me
Uh,
just, well, while we're doing that, let's just look, we might as well look at Tesla because everybody always cares about Tesla, right? And while you guys are putting some names in there, we'll look at this one now. Okay, this is the, I'm gonna get, this is the, obviously the chart on Tesla. I'm gonna get rid of some of the moving averages so they're not, the chart doesn't look so busy and so complicated. This is the 200-day moving average. You can see it's not really been the most important line lately. It was back in here because it's gone, it hasn't really provided much support. It's kind of gone above it, below it at will. But here we have, obviously since April, a nice little high there and then drop down, lower high, lower low, lower high, and today made another lower low. People were speculating that stock would drop to 650 today in the chat room. Now this is the intraday. These are the bar charts, what I call them. Oops, not the bar charts, but the hold on. Oops, I didn't mean to do that. Now, here is, but you see how this is so key. It's got to hold. This is kind of a double bottom here in February, March, right here. And it didn't get quite down that, but that's close enough as you can see. There's never, when you say double bottoms, it not only does it not have to be an exact double bottom, it rarely is, but 765. It gets below 765, which is only $20 lower for a stock. It's a $700 stock. $700 stock. That's not much. On a closing basis, it has to hold this level. Now, it can break it by a few pennies. It won't be a big deal. We won't panic, all right? Here, it stopped just above it. This time, it might stop just below it and then bounce back in a major way. I don't know. But if it breaks below it, it's going to be a big problem. And again, there's so much they have in technical analysis. People get all worked up about, especially a lot of technicians, make it sound more complicated than it is. But one of the key things is just lower highs, lower lows, higher highs, higher lows. Those are big, big things. But trend lines, some key moving averages. But this is why it's so important for this stock is see this trend line going back to the pandemic lows. Bang, whoops. See here? It broke below it, okay. Then it got back up. Then it broke below it, got right. This time it couldn't get back. So if this lower low, I'm sorry. First of all, this was a lower high from over here. This is a much lower high than here. If you follow it up with a lower low, we got big problems. And again, it doesn't mean the stock's not going to, the stock, they're going to go out of business, that they're going to fail. But it's definitely going to be negative on a technical basis. And if you want to redraw the line, which we can do, and draw it here, draw the trend line here, which, again, there's different ways to draw lines. But see, it's even broke below that trend line. Even if that's not really a good trend line, some people would want to do it that way. I wouldn't. But the point is, we need to hold. We got to avoid a lower low. And if it does, that 650 level that one of the people in the chat room was talking about is certainly, even 600 is not out of the question. And it's not because I think the company's having trouble. It's not. It's just because people are going to sell what they can. When there's no bids and some of the other stuff they're trying to sell, they're going to sell what they can. And Tesla's one of those names. Even though it's a very high price stock, it's still, trades 30 million shares a day. So if you need to get out of, raise some cash, Tesla's not a bad stock to sell. So that's a good one. So any other names we want to talk about? Or
so we have here NVIDIA from the YouTube chat, Ninja.
okay. Now NVIDIA is again, this was one that we made a great call on. Not to let's go back just a little bit. And needless to say, it was a great company in 2021. And let's get rid of some of these. I'm going to get rid of all the moving averages. Not as important here. But here's what when I made the negative call on NVIDIA. Well, actually, I made a negative call when it got really, really overbought over here, and the stock went down. So we made some nice money. That was end of last year. Some nice money in the puts in that name. But here, see. And then and as we moved into this year, I made another negative bet or negative call. Let's see here. And then this is a descending triangle pattern. Okay, and again, this is something we can learn. If you're not real familiar with this stuff, we go over it all the time. But see, I said this was a descending triangle pattern. It's basically the sellers are coming in at lower prices. That's not good. The buyers, however, are coming in at the same price, so that's good. But that means that at some point they're going to throw in the towel, and that's what happened here. And we made negative play on this one and made it real nice. However, that now that broken descending triangle pattern is now a month old. So that's kind of an old pattern. I'm not worried about that anymore. In fact, I'm seeing it's getting oversold on its RSI chart, and maybe it could rally back. Even if it's going to head a lot lower, it could rally back to that old resistance. That old support line is now its new resistance level. See how it got close to it that time, and then fell back over. Let's look at the weekly RSI chart, and I also want to look at the Bollinger Bands chart. See, it's not crazy oversold, but it's getting very, very oversold. So again, and it's a very, very good company. So remember, now look at it, it's almost down to where it was. Okay, gosh, I didn't even realize it didn't get oversold. But see, it's getting down near its 2008, and here. So you got 2010, 2018, well, two other times with the stock was approaching this kind of oversold condition. So you might need to see one more push lower, but this one's going to be a great buy. For the next bounce. On a longer term basis, I do worry it's going to have to churn around for a while. Again, this is the weekly chart, but let's look at the Bollinger Bands very quickly. Remember,
all right. Yeah.
I just going to say, and see, it's getting quite extended, quite oversold here. So this one's good. I'm not quite there yet to back up the truck and start buying the stock, but it's one that we're definitely going to look at in the very near future.
All right, here, and we have alleged crimes. Well, we covered Amazon already, and Matt will be, if there's a trade to be made, he'll be putting it in the chat room. Devin, INTC with the Intel.
Okay. Okay. Yeah, I mean, oh boy, this I like this stock long term because they're too big. There's a difference between being too big to fail and too big not to succeed. This company is too big not to succeed because it's the only company with the wherewithal to produce chips in this country and to the degree that they need. I mean, Advanced Micro Devices is a great company, but they're not going to produce chips. Now it's going to take them, this new plant going up in Ohio, this new fab. But it's going to take 2 years for this thing to work. But I mean, we can't rely on Taiwan right now. We have way too many chips are made in Taiwan. We rely on that. If China goes in and takes over Taiwan or attempts to take over, it's going to be a huge. You talk about supply chain issues. A huge problem if we can't get chips out of Taiwan. We have to be able to make it ourselves. And so the government is going to come in and say, all you guys that do the cover contracts with us, Boeing and Raytheon, you're going to buy your chips from Intel, okay? Because we need them to succeed, and for security reasons, it's literally a national security issue. So they are too important not to do well. It's a difference. They're not going to fail anyway, but it's too important not to succeed in the long run. Short term, though, they have the issues that everybody else is facing. And look at this thing here. This is get rid of all those moving averages, kind of clutter up the chart. But look at this. Look at this. I mean, it's just nothing good. Nothing good going on here, I'm afraid. See how they have this? It's a line. It's not straight. It's kind of an ascending line, but it's breaking below. See, you go back 5 years, and every time it got down here into the low 40s, it bounced back. It's starting to break. That hasn't broken it there. It's not, let's zoom in so you can see it a little bit better. See, it's not oversold, and this thing looks like it wants to break down. It's funny because it was one of my long-term picks in the tier one because I really like it. Do like it long-term, but as I always do in my tier one picks, that if it goes down more than 10%, you exit the trade. So we're long out of that trade. But see, it made a double top here, double top. Oh, that's a kiss of death. And now it's about to make a key lower low. This is really a stock you want to avoid. Now, again, if the whole market bounces back, it'll see a little bit of a bounce here, but this looks like it wants to go lower. It wants to break this 5-year support line. Maybe it doesn't. Maybe this is the time to really back up the truck because it has such a good long-term prospect. But given that it's not oversold, I don't want to. It looks like it's going to break it in a more meaningful way. It has so far, but it hasn't been a meaningful break at that level. And if it does, we got problems. And even see in its weekly chart, it's the same thing on its weekly chart, same trend line, and it's not oversold. Let's go. See how it's really not very oversold, and it's the same trend line that goes back a lot of years. So you want to avoid this stock and maybe even look at making a negative bet on this one, especially on any rally. We get a strong rally in the next couple of weeks. This will be one that after it rallies for a week or two, that we'll be wanting to play from the negative side.
Interesting stuff there. All right. Well, that's definitely some interesting setups and possible trade ideas that Matt's going to be following up here. Do you want to do a couple more, Matt? Here, how you doing with time?
Sure. Why don't we do one more here, and then we'll wrap things up and then look for tomorrow, because tomorrow is going to be a real interesting day.
All right. So last one. Let's take a good look here at Baba.
Oh yeah, okay.
Yeah, related to the FXI, I guess, trade, right? It's one of those large.
Oh yeah, and it's the whole thing. I mean, it's a clamp down of the two things. You got the clamp down by the government on this. You know, there's rumors about Jack Ma and things, and of course this whole thing with the new COVID, and it's going to be at least the end of May before they really before they do anything. But again, here's a stock that is. One of these days is going to be just an unbelievable buy, because the China, they're clamping down, but they still need these companies to do well. They don't want to put these companies out of business. Okay, now it's funny because I've been cautious on this stock all year long, I mean, for the last year, ever since Jack Ma was he got too big for his britches and he got too cocky, and boy, they cracked down on him. But what you're going to do with this one, at least what I like to do here, is because we don't know what's going on. Because we don't know what's going on with China, and it's going to be hard to really know it. If it gets really oversold on like it did here and did here, 1, 2, 3 times, then I'm going to buy it. But I buy the stock and buy some options for a short-term bounce. But for a long-term move, what we want to see and where you want to, when you really start, and again, it'll mean you miss the bottom. It's okay. Trying to pick the exact bottom of a stock like this is just too hard for me anyway. Other people, might be able to do it. And again, I'll probably, if it gets really oversold, I'll buy some call options for a short-term play. But see how the 100-day moving average is so key for this stock. It got up to it there, stopped. Got up to there. 1, 2, 3, 4, 5, almost 6, 7, 8 times. They got up to its 100 and couldn't get above it. One of these days, Alibaba is going to break above its 100-day moving average, and it is going to attract so much momentum money, it'll curl your hair. You won't believe how much the momentum money come in. This algos, because everybody knows it's a great story. Everybody knows it's a great business. Everybody knows that China wants them to succeed. They have just said, they've just tightened the screws on them, and China may keep the screws tightened for maybe a couple of years. I'd be shocked if that happened, but I think for, it may be many, many, many more months, but and God only knows what happens in Taiwan. But one of these days, it's going to break above its 100-day moving average. And whether that's 2 months from now or 2 years from now, you want to be piling into this stock because it is going to go way, way, way higher. So that's more of a long-term call. And the short-term plays, I don't want to get it yet. It's just been, it gets extremely oversold enough several times a year that it's worth waiting for that before you really try to take a bet for a short-term bounce.
Okay, interesting stuff there. All right, well, Mr. Matt Maley, Chief Market Strategist and lead trader at the Stock Picks Inner Circle chat room. It was great having you here, man. Big shout out to you. Thank you for helping all the retail traders out there navigate these markets. It's definitely not a time to do this alone, but it's definitely a time for you to join a community and start doing this together, right? This is a great community. So big shout out there to Matt Maley. Let's go.
Thanks.
All right.
Thank you very much, sir. We'll talk to you real soon, and I hope you guys will stick on here for a second or two. You can see how the chat room works. He'll give you a better idea of how things, how it really works and how the picks are shown and stuff. And for those who have joined today, I really appreciate it. I hope more of you consider it by midnight, so you can get a free laptop, and then we'll hit the ground running tomorrow. We already we made some nice trades today. I think there'll be several more that we'll be making tomorrow, and as the rest of this week and the rest of the year goes on. Have a great one. And Rodrigo, we'll talk to you real soon, buddy.
All right, man. I'll see you in the chat room tomorrow.
Sounds great.
All right, fellas. Good job, making it all the way to where we are right now. We talked a lot, and we do this every day in the chat room. Matt's going back and forth via text with the users, but I just want to show you some of the trades that we did like literally a day or two ago. We actually made money on calls, right? Can you imagine that? Like everybody's like the markets are tanking, but there are certain times when Matt is able to like look at certain opportunities and do a quick trade. Like for example, here, SPY call options are up almost 100%. I'm going to take profit in them. So you're getting entries, you're getting exits. Keep in mind, this isn't Matt's important messages. It's in this channel, if you will, right? The chat room has different channels. So the channel with Matt's important messages is where Matt is posting entries, exits, market updates, commentary on things in the market. And the inner circle chat is a little bit more fun. It's where everybody is in there, right? So you have all the users. Right now, there's about 52 people online. Today in the morning, I was in there. There were about 100 people, 110 people around there. Let's see. So basically, everybody's working together, right? Everybody's sharing maybe their research, or maybe, hey, I think that the market is going to do this because I read this, piece of information that says such and such. So it's a conversation, it's a dialogue. It's great for you to learn because you're actually watching people that understand markets and trade together, how they go about it as a team. So if you're new to trading and maybe let's say you don't want, too much education, you just want a little bit to get going, right? And you can kind of catch up. If you are that kind of person that you can catch on quickly, right? You can be in this chat room just seeing what people are talking about. And I know people that have done that. And literally, it's not hard. All you have to do is buy a call and buy a put. It's the most basic thing to do with options. It's not a diagonal. It's not a butterfly. It's not a spread. It's a basic call and a basic put that everybody can do from Robinhood or Webull, wherever. So it's a very, very simple trade, right? That's what I'm trying to get at. And for those that are asking, yes, there's a 7-day money back guarantee. And everybody that joins gets a free laptop as well. The other thing is that the price at renewal is going to be the same as it is today. So 70% off today, 70% off in 1 year when it renews. So if anybody does have questions on the chat room, put them here while we have this thing going. So this is where everybody's talking, right? Tammy, right? She's a great member there. Value Play, Zule, Chris F. These are the regulars, right? These are the people that are here like all day. They're always, sharing trade ideas. Holy shit. That's the name of the username. He said HD ran up. So, I mean, everybody's sharing things that they're looking at in the markets. And that's great because as a community, that's really the benefit of it. That's the benefit of the community where everybody is, hey, look at this. Hey, look at that. Oh, I read such and such about this. And then, Matt is looking at all these things and he's like, hey, maybe that is good for a trade. Maybe we should open a trade there, or maybe we should not open a trade, right? So you see that everybody here in the chat room is just, amazingly friendly, overwhelmed. It's January Beats on the YouTube side says, I'm new to the community and I'm a beginner stock trader. I just started paper trading. So that's great. If you just started, that's good because you haven't, been losing money with the market. But more importantly, it's very important for you to know how to short markets as well, or buy puts, January Beats. And I'll tell you that Matt's chat room, I mean, look at what's been happening in the market, right? Everybody used to have this mindset of like buy the dip, and now that's definitely not the mindset to have. I mean, but there are lotto tickets, yeah, that will play, but the chat room in Matt, they've been shorting stocks since like I think December or January, like so they've always been, they've been on top of this, like buying puts and all this stuff. And then you got that FXI trade, which was insane. And I know several people, I'm not going to tell you their usernames, but I know several people that made over $100,000 in that one trade. And you know, they're very, very well off now. So I'm not promising you that or nothing like that, but I'm just saying when the volatility is there, the opportunities are there, right? And you need to know how to take advantage of those opportunities. That is what being in a community is all about, especially when you have somebody like Matt Maley, a 40-year Wall Street veteran who's on CNBC and Bloomberg all the time, helping you with all this stuff. Look at Tammy talking about S&P breaking 4,000. This is what I'm referring to. The communities helping each other. You know, that's an important level to look out to, right? So as you can see, there's a fruitful conversation here. People are sharing trade ideas. The other thing I want to show you here is that you actually have a proprietary scanner here for the Inner Circle chat room. I don't know if you guys know this, but I'll show it to you in a bit. But yeah, there is a scanner in the chat room. It's not in what I'm showing you. You just have to open the normal chat room. But yeah, January, give it a shot. There's a 7-day money back guarantee. So that's how the chat room works, right? Inner Circle chat, everybody's posting Matt's important messages. Everybody, well, just Matt is posting. The Inner Circle chat is where everybody's posting, including Matt. There are sound notifications. You turn them on here by clicking on these things. When you see the when you see the bell turns yellow, you're gonna see that means that the sound pop-up notification is on. The other thing that we're gonna get done this week or next week, a little birdie told me, is that there's gonna be like these pop-up notifications. So like if you're on a desktop, and this is amazing for people that have like a full-time job, or if you're busy, whatever, you're running a company, like there's all sorts of people want to make money, right? So you have different situations for everybody. And if you have, just by having your desktop open, checking your email or whatever else you're doing, you can actually have that pop-up notification on desktop. And you know, we will be adding more stuff to the chat room. This is not like set it and forget it. This is an amazing thing that we've done here, an amazing community that makes it even better. And we continue to improve and add new things. Like, so now you can edit your message, you can mute someone, you can flag someone, you can reply, you can delete. I mean, you can, so, I mean, this is just so you guys know, this is a Benzinga technology chat room, right? This is not a cheap Discord. We didn't want to like do anything like that. We wanted to build it ourselves. We wanted to do it, you know, ourselves for you, where we can customize and do things and add things, and we can do it because it's our code, right? And that's something that you know, doing on a Discord is just, you know, feels a little cheap to me. So that's why we have a full team of coders and developers that are working day and night to keep this chat room open and running, and everything else that you know, improvements, all that sort of stuff. So big shout out there, Tammy, Vin, Neil, let's go. But yeah, that's the way we are here. You know, we work as a team to pretty much help you guys, right? Continue to work as a team. And we know that, you know, what you guys do in this chat room is just amazing. What Matt is doing is amazing. These trades are insane. So like, you know, even I was in the chat room this week. Some interesting things happening in the market. If you don't know, like this is a once in a lifetime kind of situation that you're witnessing in the markets. And there's no better thing to know that and be able to take advantage of that. Right. So I think that kind of covers everything. We talked about everything. If anybody has questions, the contact there is in the chat. So thanks a lot, folks, for joining. My name's Rodrigo. Thank you a lot for being here with Matt Maley. Those that joined, please make sure to get, well, you have access immediately, but make sure that you go in there tonight and that you go over the trades from Matt, the entries, the exits, the adds, subtractions, all that, and see what the community is talking about, right? So that you can get up to speed. That's the best way to kind of get going with the chat room. And then just keep in mind the format, it's so simple. Like Matt is giving you a full-on sentence with the contract symbol, expiration date, strike price, everything you need, right? Sentiment and market commentaries and updates like this, right? So it's a beautiful thing. Try it out, guys. If anybody has questions, reach out. Thanks for being here. Have a great day. Stay safe, and we'll see you guys in the chat room.